What's going on, everybody? We are finally here. The day is now. The time is here. It is Blockhouse, the inaugural event brought to you by Wrapped in Real Motion. I'm so grateful to be here with the GOAT himself, Mr. Mark Rose. Mark, how you feeling today, man?
I'm good, man. I'm excited to be here. Excited for Blockhouse. We've been working on this for a while, so yeah, really just looking forward to having a great day with some amazing conversations.
Man, I can't wait. We've been putting this together. A lot of blood, sweat, and tears has gone into it. For the people who are new to this event, new to our events, and want to get to know us a little bit better, Mark, why don't you tell folks about yourself, about Wrapped, and introduce them to the idea behind Blockhouse?
Yeah, for sure. So I'm the founder of Wrapped. We are a event and experience company dedicated to blockchain technology. Started off primarily as an agency working with a couple clients on events on their behalf. That's actually how you and I met, which was great. We can talk about that a little bit more in a few minutes. But we then pivoted into building our own branded properties that we tour all around the world. So anyone that's come to a multi-chain day or to a Solana snapshot, those are events that we've done. We've done them all over the world. So everywhere from the US to Canada to the Middle East to Asia to Europe to South America, pretty much everywhere. And from a Blockhouse standpoint, this is a new concept that we're really excited to roll out today, and we hope that everyone enjoys it as much as we've enjoyed building it. What about you, Will? Tell me about what's been going on with you and with Real Motion, and what we can expect from you today.
Yeah, and thank you for that. I appreciate it. So what's going on, everybody? My name is Will Gaines. I'm otherwise known as Living with Will on socials. I'm the founder of Real Motion. And my path here was not a linear one. I've worked across different industries from entertainment. I built a career in marketing and content creation. I served at the Senate, and I advise on blockchain, digital asset policy, and AI legislation. And each of these worlds collide in the fact that we want to bring these conversations to the public. And this is something that Mark and I deeply align to, making this accessible to the world. And, usually these worlds all stay within their own lane, but we wanted to bring them all together. And that's kind of the thesis behind Real Motion. It's the thesis behind Blockhouse, just a way to expose the world to what's being built, the people that are doing it, the conversations that are driving innovation across different industries. And what a better way to do it than a virtual conference where people can tune in from the comfort of their own home. Mark, I'm curious, for folks that are watching this and tuning in, what are some of the things that you want them to know about Blockhouse? What can they expect? And how is this different? Why this new virtual model?
Yeah, sure. So I think that, we're all seeing Zoom calls and webinars pop up almost on a daily basis, but we wanted to do something a little bit different. So, as you watch, our talk and as you watch the entire day, we want you to feel like this is a news grade style TV show. This isn't meant to feel like a Zoom call. It isn't meant to feel like a webinar. It's meant to feel really high quality. We've got, an all-star lineup of speakers and partners. And I think ultimately, when I think about, Wrapped and when I started and kind of one of my North Stars, I know you're supposed to have one, but I've got a few North Stars, but one of my North Stars has always been, invest in high quality, make the experiences the best you can. And even though this is a virtual experience, we wanted to make sure that it showed really well and had a more, institutional enterprise grade spin on it. So that's what you can kind of expect today. And, I'm really looking forward to seeing what everyone thinks, and I hope everyone enjoys themselves.
Yeah, I mean, listen, man, just to piggyback off of what you were saying, this is, essentially the ethos of what Real Motion is built on and, what brings you and I together. What I learned from working across these various different industries, whether it be policy or whether it be entertainment or whether it be technology, is that it means nothing if no one can understand it or if no one has access to it. And this is something that, I built a business on and you built a business on as well, is that when you sit at the intersection of these different industries, it's our job to make sure that the public gets access to those conversations and that the conversation is around, honesty and integrity. And, this is the speakers and the partners that we work with today. We want to introduce people to some of the best builders that are working at the frontier of tech, at the frontier of policy. And we're here to entertain you all so that, you have a good time while you do it. And I think it's one of the most important qualities of a virtual conference is that, many of our partners and many of our speakers, they have the financial ability to travel. They have the financial ability to go around the world and to make time in their calendars, but not everybody has that access. And there are some speakers that while they have the access, they don't have the time. And so we wanted to bring an event where you don't need to leave your home, you don't need to book a hotel, you don't need to fly around the world, you don't need to put yourself in a financially precarious position. You can just tune in, sit back, relax, and listen to some of the best, most thoughtful speakers in the world talk to you about what they're building and why. And so I'm beyond myself, man. I can't wait to get into it. We have some incredible speakers and panels coming up. And, before I get into it and kind of walk people through the panels and our speakers, Mark, is there anything else you wanted to add on that point?
Yeah, I mean, I think I would just say from a Blockhouse standpoint and just from like, building all of this, really just wanted to thank, everyone involved, thank our speakers, thank our partners, thank all the people behind the scenes. And I also just wanted to thank you as well because, we have a really unique story about kind of how we met. We were both working at, small, scrappy companies. Our founders connected us. This was probably 3 years ago, I would say. And we ended up building an event together that I didn't even end up going to, but you went to. It was at Stanford Blockchain Week. And we kind of hit it off from there. And when I left that company and started Wrapped, you were one of the first calls I made. And you gave me a shot. And I'm, super happy looking forward a few years later. Not that I'm giving you a shot or anything, but it's like, you know, we complement each other really well. This is me being on camera is not something that I generally like to do very often. So when I was thinking about building Blockhouse and what it would look like and making sure we had a really, engaging host, you were the first person that I thought about. And I mean, had you said no, I actually don't even know if Blockhouse would have happened. So thank you to you as well.
Of course, man. It is an honor and a pleasure to be working on this with you. And it's an honor and a pleasure to be working with these amazing speakers. To your point, we have some of the greatest names in the industry. And a big shout out to everyone who made this possible behind the camera, in front of the camera, all the partners, all the speakers, all the sponsors. We have leaders from Algorand, Anchorage Digital, Arbitrum, Cap, Chain Patrol, Franklin Crypto, LeFi, Polygon, Realign Labs, Shield, Stacks, and YMAX. And we're going to be talking about conversations around agentic AI, tokenization, confidential compute and finance, policy, yield, and many more topics and areas of inquiry. And, to the point that you made, I just think it's worth prefacing with all of these speakers and all their success and with all that you've done with Rap and all the success that you've had, I think it's worth noting to the people that are watching, like the only thing that separates these speakers and folks like Mark from anyone else who's watching this is that these people pursued their purpose and their passions. And so I encourage everybody who's watching Blockhouse, and this is a heartfelt request from Mark and myself, is you can achieve whatever you set your mind to. And part of the reason that we're doing this is to expose you all to these folks so that you can think about what it is that you want to pursue in your life. And so I just wanted to encourage you all, you can set your mind to anything and you can achieve it. When Mark hit me up in 2023, he was like, "Look, Will, I know I can do this. I've done events for banks. I've done events for high net worth individuals. I think I can do the best events in Web3. I just need a company to let me do one." And I happened to be in a situation where I too needed to do an event, and I didn't know what I was going to do. And so, we ran up our first event together 3 years ago, and the rest is history for Mark. So, highly encourage everyone, go after what you want in life. You only live once. And you too can be sitting on a panel talking with someone like Mr. Mark Rose one day. So huge heartfelt thank you to you, Mark. Thank you for bringing us all together. Huge heartfelt thank you to all of our speakers, all of our partners, all of our sponsors. And I cannot wait for us to get into this. And Mark, before we jump into our first panel, is there anything you want to leave the audience with before we get into it?
No, just enjoy yourself and pay attention. I'm not expecting everyone to sit on the live stream for the entire day, but there's a variety of topics. So find the ones that speak to you and pay attention because there's going to be a lot of really interesting conversations happening. And if you like what you're hearing and you want to take that next step, like Will was kind of saying before, RSVP on our Luma. Sign up for the event, even though you're already, watching it, and tell us which partners and speakers you're interested in getting connected with. And we'll be doing some matchmaking after the event is over. So this is a great way to, build a little bit of business building, even though we're doing something virtually.
And sit back, relax, and enjoy, folks, because this is the inaugural Blockhouse. It's the first of many. Thank you all for being here. I love you. Love yourself. And enjoy. And follow the speakers, follow the partners, and make sure you hit that RSVP link if you're trying to get in touch with them. Welcome to Blockhouse, everybody, and enjoy. My God, what a talk that was. Thank you all for tuning into Blockhouse. And remember, if you want to get in touch with the speakers, make sure you go RSVP on the Luma. It's the only way that we can help you get in touch with them if you're interested. You can find the Luma at Real Motion Inc. on Twitter, at WrappedXYZ on Twitter, or luma.com block_house RSVP if you want to get in touch. Stay tuned. We got more for you. And thank you guys for joining us for the inaugural Blockhouse. Let's get back to the show. Yo, what's going on, bro? Oh, you're looking for a job? Okay, hold on 1 second. I'm just in the middle of something. Talent is your biggest competitive advantage, but only if you hire right. Morales HR is a human-centered recruiting and executive search firm built for today's business demands, delivering curated, high-quality talent when it matters most. From full-time contract roles across North America, Morales HR connects you to the talent your company needs. Real people, real experience, real results. So if you're falling behind on hiring, frustrated by low-quality candidates, or worried about the rise of fake resumes, go to moraleshr.com and experience a better way to hire. And if you're the one looking for a job, look no further than moraleshr.com. They're here for you too. No black box and no resume sent into the void. You work directly with real people who take the time to understand where you've been and where you want to go. So if you're looking to make your next hire or you're looking for your next job, go to moraleshr.com and experience a better way to move forward.
A brand's reputation isn't built in the real world, it's built online. In the age of AI, malicious actors are using modern tools to attack faster and at a larger scale than ever before. Impersonation accounts and cloned websites are used to target the users of brands of any size that has reach, and they're getting harder to tell from the real thing. This is why Chain Patrol takes on these threats to monitor, block, and take down online threats that prey on the trust of users, protecting your brand so your customers never have to guess what's real.
Hey everybody, I'm Will from Real Motion, otherwise known as Living with Will, otherwise known as a human being. Thank you guys for tuning in to the inaugural Blockhouse. It means the world to me that you're here. If you're looking to do some marketing, if you're looking to make some great content, or you're looking to do some amazing events, reach out to myself at Real Motion Inc. or Living with Will, and Mark and I are happy to help however we can, whether it's a wrapped event, whether it's a Real Motion affair. You let us know and we'll take good care of you. Thank you so much for being here for Blockhouse, and let's keep it going, y'all. Have a wonderful day, and I love you. Hey, everybody. Thank you to our speakers and our audience for tuning in today. This event was created for educational and entertainment purposes only. Nothing said reflects financial, investment, legal, or tax advice, and no statement should be interpreted as a recommendation to buy, sell, or hold any asset. Views expressed are those from the individual speakers, not the hosts or the organizers. Please consult a licensed professional and do your own research before making any financial decisions. Thank you again for tuning in to Blockhouse. Let's get back to the show. All right, everybody, we are back. Welcome to Blockhouse. Thank you so much to Dave Leibowitz and Lou Moan for joining me here today. And gentlemen, it's such a pleasure. Thank you for being here.
Thank you for having us.
Thank you.
Really excited to jump into it. And before we get into the crux of the conversation, I'd love for the audience to just get to know you both a little better. So, Dave, why don't you start us off? Tell us a bit about yourself and what you're working on.
Of course. Thanks for having me on, Will, and everybody on the Black House team. My name is Dave Leibowitz, better known as DeFi Dave. I am the head of growth of CAP. And at CAP, we are a credit platform, and we're backed by financial guarantees. We received our backing from Franklin Templeton, among others. We work with a ton of institutions who want to tap into the world of on-chain credit, not because out of their goodwill, but because it's more efficient to do so. So we can get into that more on the program.
I love it, man. I can't wait to. And Lou, same question over to you.
Lou Moan, I'm a managing principal at Franklin Crypto. Franklin Crypto is the investment management platform within Franklin Templeton that has a focus on investing in digital asset markets. My focus is on venture capital investing at the seed and Series A stage, and met Dave a couple of years ago and look forward to our discussion today.
I love it. And thank you guys again. I'm really excited for this conversation. So, Lou, I'm going to take this next question to you. We spoke about this a bit, but Franklin Crypto is an early backer of CAP. And I'm interested for you when you're evaluating an investment in blockchain infra or otherwise, what comes to mind for you? What's top of mind?
Well, first thing we look at is the capability of the team. Are they mission driven? Is there a passion or a problem that they're looking to solve that they feel like their design of that infrastructure has the potential to create network effects, give them a wedge into a market that would otherwise be impossible on either different forms of blockchain infrastructure or just non-blockchain infrastructure. We then evaluate the potential for network effects, and just time to market is also an important factor. I think we're in an interesting time for blockchain infrastructure where it feels like there is abundance of it out there, but things we're keeping an eye on as investors is where those networks seem to be concentrating and where the activity on chain is picking up.
I love that. And Dave, kind of the other side of that question for you, for CAP, what made Franklin Crypto the right choice or one of the best choices, I would say, as an investor beyond just the capital?
Oh, where can I start? I think for one thing, Franklin Crypto and Franklin Templeton, they've been in the space for a long time. Like people keep on saying the institutions are here, the institutions are here. No, Franklin Crypto has been here since the late 2010s. I remember they were, the first to come out with a tokenized money market fund. So they bring a lot of expertise. They bring an excellent network that they've connected us to a bunch of different parties over their time investing in us. So, it's been a pleasure working with them and, continue to look forward to working with them in the future.
It just overlooked is, we aren't just investors in the space, we're builders as well.
I love it. No, if you guys want to touch on that a little bit, I would love to get into it.
What Dave alluded to around kind of our participation in on-chain markets was really around the stack that goes into supporting an actively managed fund strategy. There's a lot of technology that goes behind that. And often most of it was running on 30-year-old legacy database systems. We viewed blockchain as a potential enabler to bring new utility to investors.
I'm going to take it in a different direction here. As you were saying, Lou, and Dave, you were alluding this as well. People keep saying that institutions are here as if this is like new, but there's been folks like Franklin Crypto who have been here building and investing in this space for years. But we are seeing this emergence of the regulators beginning to really come into the fold, right? We've been seeing things like the Genius Act getting passed. Clarity Act is moving its way through the Senate, getting back into the House. And we've seen the SEC begin to make statements and prepare themselves for regulation. So I would love to talk a little bit, Lou, if you'd like to take this one first about Hester Pierce's recent statements on crypto vaults and lending strategies. Would love to hear your opinion on that.
Sure. So I think this is really thematically a continuation from the commissioner's statement she made previously about tokenized stocks. And what she kind of said there was, look, just because there's a tokenized representation of something does not mean is exempt from securities laws that exist in the United States. she's she's walking along a similar path here with her statements. Franklin Templeton, as an asset manager, is effectively in the business of offering financial advice. So what she's unpacking here is, I think, honing in on the investment discretion associated with the strategies and how these vaults are deployed, and the security like investment advice components that seem to be coming along with actively managed vaults. We are an active manager. We're attracted to this space because we see the potential for distribution of actively managed strategies on native blockchain markets. But I think she's basically saying, be careful. This looks like investment advice. So there may be a path to where this, again, intersects with existing securities laws.
Dave, did you want to jump in on that as well? I see you nodding in agreement.
Yeah, no, Lou hit the nail on the head. What Hester Pierce, Crypto Mom, said in her statement was, just because you tokenize something on chain, just because these vaults exist on chain, does not escape the purview of the SEC and regulators. And if you read her statement itself, it basically provided a framework from fully automated, immutable vaults that are built in the spirit of crypto on one side of the spectrum, and on the other side of the spectrum, we see these actually managed, human intervened vaults. And this is really important because we've seen time and time again what happens when these actively managed vaults go wrong. I mean, last year we had Stream Finance. Even years before that, we had Celsius and BlockFi and this and that. So this has been an important issue. And so it's great that Hester Pierce came out with a statement about that. There was a pretty in-depth discussion on Twitter about the statement and what constitutes as something that's more actively managed compared to something that's fully immutable. And then you see people and builders in our industry actually going to Washington, going to DC to discuss with regulators, to educate regulators. So I think we've come a pretty long way as a space, especially considering a few years ago how the tone of crypto was perceived in the country by regulators. So it's great to see on a higher level, it's great to see this progress and discussion overall, to see regulators and builders having this conversation with each other to build a better system for everyone.
I completely agree. And shout out to the trade associations like Chamber and Crypto Council for Innovation and Blockchain Association for really pushing that work forward. And it's really refreshing to see regulators take a stance that they want to welcome us into the country. Like the last SEC administration was a little bit different, but it's been a completely different wind. And I'm keen to see how things land with clarity. And it's a really exciting time for the industry. And it's an exciting time for CAP as well, Dave. I'd love to talk to you about, CAP's core structure. At the core is this credit delegation where there's a guarantee. And I'd love to hear you speak on this better. You'll speak on it better than me, but there's a guarantee from the underwriter that a borrower will properly manage their loan. And I'm curious why that structure matters here and how it's actually built to hold up under stress. Just based on the conversation we're having, and I'd love to hear your opinion on this.
Yeah, going off from our last question, we see actively managed vaults and anything that's actually managed with strategies. When they go wrong, it's, users are left holding the bag. And this is due to human error. This is due to people thinking they know more than the market. With CAP, we don't have that assumption at all. Instead of, us deciding the strategies, it's like, no, let's create a marketplace where people that have expertise in their given areas and put in skin in the game at the same time can come together, unite, and build a system that actually grows the pie for everyone involved. So who are the participants in the CAP system? Well, you have the depositors, you have the borrowers, you have the underwriters. And the credit delegation happens between the underwriters and borrowers. Credit delegation isn't something that's new. It's existed before, but no one's really put the tender love and care for credit delegation to be successful, especially on chain. And so in CAP system, instead of, trusting the borrower, the depositors merely trusting the borrower, it's the underwriters. They go ahead, they do the due diligence, they take on that work, and they actually vouch with their own capital, with their BTC, ETH, or gold, to the borrower in order for that borrower to access the underlying USDC in the CAP system. And we see a number of advantages with that system. I mean, for the borrowers, they're able to basically access an uncollateralized loan and grow their book. But keep in mind, in the eyes of the depositor, the loan is fully collateralized by the underwriter's assets. So if the borrower, goes ahead and runs off, it's the underwriter that's penalized, not the depositor. So this keeps the system solvent, whole, and able to grow and scale.
Wow. I have so many more questions for you, Van, but I wanted to
I have
go.
answers, but yeah,
Yeah,
go
no,
ahead.
I'm so glad, and I wanted to go, Lou. I'm curious on your side of the field. Some people would and do argue this is genuinely new. Others are saying it's a version of private credit that comes with better reporting. And I'm curious, if we were to take the blockchain away from it, is this private credit comparison fair to make, or is this something that private credit generally can't do without blockchain?
Well, I think there's two sides to that. One is an investment thesis where we're interested in how blockchain can make idle assets more productive. And the opportunity that the CAP team saw was an ability to interact with multiple sides of a marketplace where each side had needs and wants and try to match those needs and wants together in a protocol format. On the private credit side of things, I think the vast majority of the approach, at least speaking to the asset manager's perspective, is still a function of that. How can blockchain in the fund managing stack offer private credit opportunities to investors? And I think we're still in the experimental phase of these massive pools of capital in private credit markets that what on-chain doesn't necessarily solve is the liquidity mismatch, a team's edge in sourcing deal flow, and their ability to underwrite credit risk to generate, returns and limit default rates on that side of things. And, there's a lot that you can get into with collections and restructuring debt. That is still very much a TradFi dominated space. And ideas and protocols like CAP, I think, are just scratching the surface in terms of the ability to offer new instruments to on-chain investors that, really brings this kind of private credit-like construct to a new distribution channel and a new type of investor.
Yeah, to go on to with what Lou is saying, yes, there are a lot of similarities with private credit, but also I think there are a lot of things that are different. I think with primitives and platforms like CAP, what CAP does is actually democratizes origination and also enshrines enforcement. And what do I mean by that? When I say democratizes origination, with a lot of traditional private credit funds, you have a committee or group of people deciding where to allocate funds, and they're the ones bringing deals to the table and whatnot. In CAP system, we have different underwriters. They're bringing deals to the table. And each underwriter has a different agreement with the borrower. So this can scale much, much, much more efficiently than something in the traditional private credit in the future. And when I say enshrine enforcement, well, in traditional private credit, if a borrower goes bust, that ends up in the courts for months or years. In CAP system, if a borrower goes bust, that is literally just a smart contract function away of like, boom, the underwriter's penalized, the depositors remain whole. And I like to say with CAP, the important stuff is on-chain, just like what I just mentioned. And the important stuff that's off-chain is off-chain. So the borrower and underwriter, they can go settle in the courts. Meanwhile, the depositors, the people that we want to protect the most, are made whole.
Wow, that's amazing. And everything's on chain. So
everything's, yeah.
That's amazing.
Exactly.
I want to keep going down this rabbit hole for a second, but I did have a question that is loosely on this note, Dave, which is I've noticed this trend where every crypto yield product right now is riding this very specific rate environment. And if rates were to come down and that spread compresses, does the entire category of on-chain credit still make sense? Or is the model only possible in the way that today's conditions are met? What are your thoughts on that? Because it's something that me and Mark have been talking about.
Yeah, well, CAP is actually built for environments such as low rate environments, because how CAP is built is you're always going to be marginally better than the T-bill rate. You're always going to be marginally better than the on-chain rate. And so if rates go down, well, what does that mean? It means it encourages risk appetite, and it encourages borrowers to come in and look for opportunities with the edge that they have. And they're going to need capital. And where are they going to get capital? Well, in places like CAP where they can get it uncollateralized. So it's actually a very favorable environment for platforms like CAP.
I love that. And Dave, I'm so curious. We've known each other for years in different circles, and you've always been a huge proponent for DeFi. You've been one of the biggest names in the space that advocates for it, educates for it. Um, Tell me about like your journey with Cap. Like, how did you start this company? What inspired it? Like, walk the audience through this new journey of yours.
Yeah. Yeah, so I've been in DeFi for 6 years, crypto for 9 years. So when you're in it for this long, you really see how it's evolved and changed over time. And I joined almost a year and a half ago now. The thing with Cap is everybody a part of the team. We're all DeFi veterans. I like to call us the DeFi Avengers. Benjamin, the founder, started stablecoin Qidao. Our CTO and all our devs are from Beefy Finance, one of the largest yield protocols. And so we've seen the best of DeFi and how it can empower users and grow the pie financially for everyone. But also we've seen its faults, and we've also seen where it's went wrong. And how we think about things is we don't want to trust anybody. We would rather trust market incentives and people to act in their own self-interest to strengthen a system than just trust me, bro. And I think that's how you build in the ethos of crypto. That's how Bitcoin is built. Bitcoin is a proof of work marketplace, but it's Ethereum, a proof of stake marketplace. And so we're applying all that to basically yield. And so I joined Cap a year and a half ago. Ben asked me to join to come on as one of the early employees. And, I've looked into the Cap system before. I've actually interviewed, back when restaking was a thing and I had my Flywheel podcast, I interviewed Sriram back in 2023. So I knew what this type of primitive was capable of. And it just completely clicked that yield was going to be the marquee use case, which it is. If you look at, 100%, 99, 100% of all, symbiotic or revenues, it is from Cap. And so that has been proven. So it's been an absolute pleasure to build and to continue to build this. And we're excited for what the future holds. And I like to say that Cap is the Uno reverse card to finance. And so, this idea of instead of DeFi coming off chain, trying to wrap its products and trying to fit into the rules of TradFi, no, how you're really going to grow DeFi is if TradFi comes on chain and they play by our rules instead. And that's what Cap is really doing, because what is exactly happening is you have these borrowers, the flow traders, the Susquehannas of the world, they're actually coming on chain to borrow stable coins from Cap, which has never been done before. And I think it's really cool. It gets me excited, and I hope it gets you excited too.
Yeah, I'm excited for you guys, man. It's it's awesome to see, and shout out to the team and to the folks that you called out, like folks like Sriram as well for pushing the space forward. And Lou, we're just meeting today, and it's been a pleasure. I'd love to get to know a little bit more about your crypto story as well. How did you get into the space, and how did you meet the Cap guys? Like, tell us about that story.
Sure. So I think my journey into blockchain came from a natural evolution of via the asset manager's perspective in how we can market investment products directly to consumers and retail, which is largely an untapped market in the United States. So we're talking mid 20 teens where the robo wealth advisory apps really came to market. I'm talking about Acorns and Wealthfront, and you know a product that really was serving an ignored segment of the population in terms of their ability to grow wealth. This then kind of evolved and specialized into blockchain. I think I made my first investment into Bitcoin, under $3,000. Unfortunately, paper handed it, but the potential of digitally native markets as opposed to just kind of layering in an ETF model portfolio to someone who's just starting their wealth accumulation journey, I think was powerful. And I think, the market views it as an accelerant. But I've been, committed to what I would describe as disruptive technologies to asset managers for the last 7 years. And blockchain certainly is one.
I love that. Disruptive technologies. Dave, you look like you wanted to add something. Did you want to?
Yeah. No, it's funny to think about my journey because I come from more of a humanities background. So the thing that's interested me the most about crypto and blockchain technology is the sovereignty aspect of it. How users can take control of their own funds and take control of their own finances. And when I view, when I first saw Bitcoin, it's like, it's 21 million. Everybody's like in their little castle or whatever. But what really inspires me about chains like Ethereum, they think in terms of the infinite machine. The entire world is your canvas. You can build any immutable app that is just as sovereign, and can be built just as sovereign as the chain itself. And so, that still does get me excited. And it's really interesting to see how much the space has evolved and seeing all these new players come aboard. And that also the institutions make me excited as well. Like, I know like a lot of people may be more traditional, kind of reminiscing about the old days, but if we want to evolve and grow and have this technology make the difference that it can in the world, we have to build the rails for these institutions to come. And CAP is a huge part of that solution.
I love that. And I completely agree with you. I think that it's a common misconception that, adoption is a bad thing. It's like, when you find an artist and you get upset when they blow up. I think it's a testament to the values of this industry and what it's capable of doing that everyone is starting to adopt it.
Yeah, and I think every new class and every new cohort of participants, what they add and bring is vitality. And that's so essential for a lifeblood of any industry. I mean, I wrote about this in my lore building thesis back in 2025. Yes, you have people that are able to basically be shepherds and write the story of, the given community or given space, but they have to provide the feel for others to come aboard. And those people that come aboard will have to do it under their own volition because they're motivated to innately. And so I think like early on, there's more of there's something deeper, but as you grow into a bigger and bigger space, these new institutions, they definitely have more than, they have profit incentives, of course, but that's a pretty big incentive nonetheless.
Yeah, and it's the beauty of this industry, man, that the decentralized ethos includes everybody. So I'm so grateful, and I'm so grateful to the two of you. I know you're both incredibly busy gentlemen, so I have one final question for the two of you. So Lou, I'm going to kick it off to you first. What are you most excited about right now? What's going on for the second half of 2026, and what can we look for? Maybe some alpha for Franklin Crypto.
Sure. So things keeping an eye on really proliferation and still experimentation of agentic workflows and activity within these internet native capital market ecosystems. Back to Dave's comments on the adoption theme, I think we do see in cycles that, adoption sometimes has a tendency to flow with price action. And for the last, post October of 2025, it's been a challenging environment. We see agents as having the potential to be a, really pour gasoline on the adoption side of things and activity on chain. So something we're keeping an eye on there. That is really the primary focus. And then, everyone kind of wants some clarity, right? And tough to say if that's going to happen, but I think that's going to be, an accelerant of institutional participation in the space that really has the potential to move beyond proof of concept and represent real scale.
Yeah, I couldn't agree more with you about clarity. That's really, it's going to be down to the wire, it seems like there. But for me, the things that I'm excited about, and I actually tweeted about this yesterday, back in 2019, I remember in the depths of that bear market, everyone was pivoting out of crypto, trying to take crypto out of the name. There wasn't even an on-chain word at all. And then all of a sudden, DeFi summer came along and really kicked off the on-chain economy that we know and love today. I see a lot of similarities today, especially now with there's, a good amount of people that have pivoted out of crypto. They go to, robotics or whatever and whatnot. At the same time, on-chain still, not only is it still there, but it's growing, it's thriving. And my prediction is in the same way there is a DeFi summer, I think there's going to be some RWA season where you're going to see this experimentation that Lou talks about, but it's going to be built around RWA assets to, grow the TVL and the velocity of those assets in that TVL. So I'm really excited about that. And I feel like everything we built over the years in the blockchain stack, whether, it's making the L1s more efficient and gas optimized, whether it's making, smart contracts, easier, more developer friendly, every part of the stack has been built for eventually when RWA is poured over. And we've seen the results of this. I mean, look at Hyperliquid. Their most traded assets are not crypto assets, they're actually equities, commodities. And now you're seeing, a bunch of different private credit funds come on chain. And so it's only a matter of time until the entire world comes on chain. But how it comes on chain is still us to decide and still us to write.
Man, I couldn't agree more. And we could use some more clarity. So we'll see how that goes in the coming weeks. And we got a great conversation later today that's going to be talking about this with Anchorage and Plume. We're going to be getting into that. But gentlemen, I'm so grateful to Cap, to Franklin Crypto, and to the two of you for joining us today. Really grateful. And I look forward to getting to know you better and hearing more about you both and what you're building soon. This is amazing.
Thanks so much, Will.
Thank you so much.
My God, what a talk that was. Thank you all for tuning into Blockhouse. And remember, if you want to get in touch with the speakers, make sure you go RSVP on the Luma. It's the only way that we can help you get in touch with them. If you're interested, you can find the Luma at Real Motion Inc. on Twitter, at WrappedXYZ on Twitter, or luma.com block_house RSVP if you want to get in touch. Stay tuned. We got more for you. And thank you guys for joining us for the inaugural Blockhouse. Let's get back to the show. Yo, what's going on, bro? Oh, you looking for a job? Okay, hold on 1 second. I'm just in the middle of something. Talent is your biggest competitive advantage, but only if you hire right. Morales HR is a human-centered recruiting and executive search firm built for today's business demands, delivering curated, high-quality talent when it matters most. From full-time contract roles across North America, Morales HR connects you to the talent your company needs. Real people, real experience, real results. So if you're falling behind on hiring, frustrated by low-quality candidates, or worried about the rise of fake resumes, go to moraleshr.com and experience a better way to hire. And if you're the one looking for a job, look no further than moraleshr.com. They're here for you too. No black box and no resume sent into the void. You work directly with real people who take the time to understand where you've been and where you want to go. So if you're looking to make your next hire or you're looking for your next job, go to moraleshr.com and experience a better way to move forward.
A brand's reputation isn't built in the real world, it's built online. In the age of AI, malicious actors are using modern tools to attack faster and at a larger scale than ever before. Impersonation accounts and cloned websites are used to target the users of brands of any size that has reach, and they're getting harder to tell from the real thing. This is why Chain Patrol takes on these threats to monitor, block, and take down online threats that prey on the trust of users, protecting your brand so your customers never have to guess what's real.
Hey everybody, I'm Will from Real Motion, otherwise known as Living with Will, otherwise known as a human being. Thank you guys for tuning in to the inaugural Blockhouse. It means the world to me that you're here. If you're looking to do some marketing, if you're looking to make some great content, or you're looking to do some amazing events, reach out to myself at Real Motion Inc. or Living with Will, and Mark and I are happy to help however we can, whether it's a wrapped event, whether it's a Real Motion affair. You let us know and we'll take good care of you. Thank you so much for being here for Blockhouse, and let's keep it going, y'all. Have a wonderful day, and I love you. Hey, everybody. Thank you to our speakers and our audience for tuning in today. This event was created for educational and entertainment purposes only. Nothing said reflects financial, investment, legal, or tax advice, and no statement should be interpreted as a recommendation to buy, sell, or hold any asset. Views expressed are those from the individual speakers, not the hosts or the organizers. Please consult a licensed professional and do your own research before making any financial decisions. Thank you again for tuning in to Blockhouse. Let's get back to the show. My God, what a talk that was. Thank you all for tuning into Blockhouse. And remember, if you want to get in touch with the speakers, make sure you go RSVP on the Luma. It's the only way that we can help you get in touch with them. If you're interested, you can find the Luma at Real Motion Inc. on Twitter, at WrappedXYZ on Twitter, or luma.com block_house RSVP if you want to get in touch. Stay tuned. We got more for you. And thank you guys for joining us for the inaugural Blockhouse. Let's get back to the show. Yo, what's going on, bro? Oh, you looking for a job? Okay, hold on 1 second. I'm just in the middle of something. Talent is your biggest competitive advantage, but only if you hire right. Morales HR is a human-centered recruiting and executive search firm built for today's business demands, delivering curated, high-quality talent when it matters most. From full-time contract roles across North America, Morales HR connects you to the talent your company needs. Real people, real experience, real results. So if you're falling behind on hiring, frustrated by low-quality candidates, or worried about the rise of fake resumes, go to moraleshr.com and experience a better way to hire. And if you're the one looking for a job, look no further than moraleshr.com. They're here for you too. No black box and no resume sent into the void. You work directly with real people who take the time to understand where you've been and where you want to go. So if you're looking to make your next hire or you're looking for your next job, go to moraleshr.com and experience a better way to move forward.
A brand's reputation isn't built in the real world, it's built online. In the age of AI, malicious actors are using modern tools to attack faster and at a larger scale than ever before. Impersonation accounts and cloned websites are used to target the users of brands of any size that has reach, and they're getting harder to tell from the real thing. This is why Chain Patrol takes on these threats to monitor, block, and take down online threats that prey on the trust of users, protecting your brand so your customers never have to guess what's real.
Hey everybody, I'm Will from Real Motion, otherwise known as Living with Will, otherwise known as a human being. Thank you guys for tuning in to the inaugural Blockhouse. It means the world to me that you're here. If you're looking to do some marketing, if you're looking to make some great content, or you're looking to do some amazing events, reach out to myself at Real Motion Inc. or Living with Will, and Mark and I are happy to help however we can, whether it's a wrapped event, whether it's a Real Motion affair. You let us know and we'll take good care of you. Thank you so much for being here for Blockhouse, and let's keep it going. Y'all have a wonderful day, and I love you. Hey everybody, thank you to our speakers and our audience for tuning in today. This event was created for educational and entertainment purposes only. Nothing said reflects financial, investment, legal, or tax advice, and no statement should be interpreted as a recommendation to buy, sell, or hold any asset. Views expressed are those from the individual speakers, not the hosts or the organizers. Please consult a licensed professional and do your own research before making any financial decisions. Thank you again for tuning in to Blockhouse. Let's get back to the show. My God, what a talk that was. Thank you all for tuning into Blockhouse. And remember, if you want to get in touch with the speakers, make sure you go RSVP on the Luma. It's the only way that we can help you get in touch with them. If you're interested, you can find the Luma at Real Motion Inc. on Twitter, at WrappedXYZ on Twitter, or luma.com block_house RSVP if you want to get in touch. Stay tuned. We got more for you. And thank you guys for joining us for the inaugural Blockhouse. Let's get back to the show. All right, everybody, we are back. Welcome back yet again to Blockhouse. I'm so grateful to be here with Alex and Neil. Thank you, gentlemen, for being here. Really, really grateful to get into it with the two of you.
Absolutely. Thanks for having me.
Appreciate it.
Of course. So, before we kind of get into the swing of things, we'd love to just start it out with some intros about who you both are and what you're both building. So, Alex, why don't we kick it off with you? Please tell us about yourself and about Stacks.
Yeah. So I'm Alex Miller. I'm the CEO of Stacks Labs, which, as the name implies, is the labs company for the Stacks ecosystem. So we're kind of the oldest Bitcoin layer 2 out there. As I like to put it, our claim to fame is we did the only kind of SEC qualified Reg A offering for tokens. So we've been at this for a while, and we've really always been focused on, like, how do we build an ecosystem with maximal trust? Because ultimately, we're really big believers in Bitcoin. We're really big believers in what it means to have, like, this alternative financial system for it. That's what it brought me into it originally. And it's how do we make it faster? How do we make it easier? How do we expand the use cases? How do we bring it to more and more people? And I think the only way you can do that is with high trust, because of course, the real original innovation of Bitcoin is the decentralization of trust and what it provided there. And so I know we're going to talk a lot today about staking and how we make Bitcoin productive and all of that. And that's really what we're always just here to do, is how do we let Bitcoin as an L1 and an asset stay as simple and as trusted as possible for people, while bringing all kinds of additional functionality and capability and lowering the cost so as many as people as possible can use it.
Man, I love that. And I'm so grateful to be able to get into this together. And Neil, same question over to you. Would love to hear about you and Fireblocks and what you are building.
Yeah, really exciting times. I got to say, I've been at Fireblocks for about 5.5 years now, really focused on everything financial markets related. And so if you think about when I first joined, it was really heavily dominated in the crypto industry around institutional trading and a lot of different exchanges and startups that were popping up. And we've really transitioned now to a pretty wide swath of institutions that have stepped in globally. Think of the Bank of New York's of the world, all the way to the Revoluts and the new banks, and now the MoneyGrams and the Western Unions. And so when you think about from a Fireblocks perspective, what we're providing, it's really the back end infrastructure and platform that allows these regulated financial institutions to build on-chain or blockchain-based products and services. And it's been a really exciting evolution over the last, like I said, 5.5 or so years. I spent just under 4 at Ripple prior to this, and about 10 in the sexy, exciting world of corporate treasury. So really saw a lot of the friction and inefficiencies that I'll say traditional market structure has brought to their core clients through those 10 years in the lens of FX, global liquidity management, and really everything risk management. And so said, hey, there's got to be a better solution here. Turns out there really is. We're really starting to see it scale. So similar to Alex, really excited for this conversation and to talk through what we're seeing out in the market and what's coming in the future.
I love it, man. And you made this transition so easy for me. I'm going to kick this one off to you first, Neil, because you guys have been ahead of the curve for a very long time. And as the institutional access comes on board for the industry, and as we're talking about Bitcoin in this regard, things have changed dramatically over the last few years. And you guys have been at the cutting edge of this, with major banks, asset managers increasingly supporting the asset. Owning Bitcoin and having functional Bitcoin markets are two very different things. And so I'm curious, from your perspective, what's still missing before Bitcoin has that same kind of financial infrastructure institutions expect, or like other major assets?
Yeah, I think pun intended, we need some clarity here. At the end of the day, you can have ETFs that can get exposure to a certain asset that you may not be able to get direct access to. But in order for Bitcoin to really function in sort of its native state, which is actually on-chain capital markets and utility driven, you need the ability for institutions to be able to access this asset and leverage the utility that it ultimately can provide. And so it needs to be treated the same as every other asset that's out there in a regulated financial markets way. I think we're starting to get there. Again, ETFs were a great unlock in terms of getting institutional exposure to a lot of people, but now we actually need to derive institutional utility for Bitcoin. And until we have real guardrails and guidance for that can allow these institutions to participate more directly, build out derivatives, lending markets around it,
we're really sort of stuck in this little waiting area, gray area. So hopefully we have that to come. I do know that I'm not obviously a policy expert in any way, but I do know that we're starting to see a little more structure from the various bodies here in the U.S. as well. So even if we don't necessarily get a full Clarity Act passed this year, I think we'll start to see at least some structure and framework from the various regulatory bodies that will at least get us continuing on in the right direction.
No, completely agreed. And shout out to all the trade associations that are working hard to help us get Clarity Act passed, like the Chamber, Blockchain Association, and the Crypto Council for Innovation. Really appreciate the work they're all doing. And Alex, I'd love to hear your perspective on this as well. Obviously, this is, paramount in what you all are doing at Stacks.
Yeah. Yeah, I think, as good an asset as Bitcoin's been for a while and as stable and kind of trusted is, at least on a relative basis to crypto, especially if you're going to be doing it in size, if you're an organization, there's a lot of infrastructure that you need on it, right? And so we saw, even going back 10 years, right? You started to get much more reliable exchanges. You started to get reliable custody providers out there, but you need people who can do more and more and more than that, right? You need, if you're going to interact online, most are not going to just like transfer it into a multi-sig or something and actually like interact directly on it. And frankly, even if you want to, there's not that many Bitcoin wallets that support like dApps and things like that, right? There's a couple actually like Xverse and Leather that started in the Stacks ecosystem and also support Bitcoin and added a lot of programmability, especially back in 2023 when ordinals came out. But you really need those layers because I think ultimately most large corporations are going to be very, very risk averse, especially when it comes to losing Bitcoin, right? Like it's one of those funny things where you might have a very good risk tolerance when it comes to like the types of investments that you make. And, hey, all right, we took a risk on something. We didn't make the money on it. We lost whatever, that happens. But like nobody excuses losing your money through like incompetence or accident or theft or whatever, right? It's like you had one job. Do not let the money get taken for like a dumb reason on it. Even as Bitcoin has become more and more trusted as an asset and people are comfortable with the financial exposure of it, that's very different than being comfortable with like the logistical exposure to it. And so I think that is something where like folks like Fireblocks, let's say, make a huge, huge difference in the ecosystem. And the growth there, I think, is reflective of that because and at the same time, letting people come in and do things like the ETFs where it's like, it's a structure that you really know and see. And this is the same reason that we see, folks like Custodia Bank who are really trying to like push and say like, hey, let us have bank charters. Let's let banks actually custody digital assets because that is a relationship that a lot of folks are very comfortable with and will do. And of course, that's also part of the reason you see a lot of people fighting against that is I think there's a lot of people who aren't even necessarily think it's going to implode a bank, but they don't want to see crypto more successful. They don't want to see it bigger. And so they want to block anything that helps make it come into the mainstream more. So those types of advancements are continuing to happen. I think really important. They need that infrastructure. And it's part of the reason, like with Stacks, for instance, that we want to, yes, obviously make it both cheaper and easier for people to use Bitcoin, but especially to produce things that are understandable for large institutions all the way down to the smallest individual investors, right? What are the things that we can make that sort of work across the board for everybody? Because if you don't give them like assets and products and capabilities and structures that are understandable and fit into the risk management frameworks that they have, they're not going to do it.
No, it's a great point. And thank goodness that we have, like you made such a valid point about there's concentrated lobbying efforts to try to stop this adoption from happening. So thank goodness we have things like, whether it be Ripple or Coinbase. We're talking with Anchorage and Plume later today about some of the lobbying that's happening in the industry. Grateful that we have people that are championing this on the Hill. And you made a valid, amazing point, Alex, that I want to segue with, which is, Bitcoin is obviously the biggest asset in our industry, but it's still very largely disconnected from the rest of on-chain finance. And I think this is, something you all have been very instrumental in. Why do you think it's taken so long for this to change? And what actually do you think changes once it's properly connected?
Yeah. So obviously the biggest challenge has been the fact that Bitcoin's not programmable, right? Like there's no smart contract capability. You've got some very basic stuff with like Taproot contracts and things on it, but it's really, really limited on it. And again, that's not necessarily a bad thing, right? You'll see a lot of people talking about, how much functionality and capability they want. You obviously have constant BIP fights over people. Personally, I think actually keeping Bitcoin relatively simple at the base layer is a good thing, right? There's a lot of people who have built a lot on top of it. A lot of the trust is earned because it is so simple, right? One of my favorite things, even if you go back and you look at the original Bitcoin white paper, it is so simple and easy to understand for everyone. It's obviously a lot of very big ideas to it and a lot of technical implementation had to still come along. But I think actually the simplicity of Bitcoin literally goes back to that kind of original ethos of it. So the trade-off to that is, though, that like you don't have smart contracts, right? You can't do a lot of very more intelligent things trustlessly on top of Bitcoin on the same way that you can on Ethereum or other languages that have come since, right? They've gotten the benefit of being able to see, okay, hey, what did Bitcoin do right? And they only have to focus on like the incremental part over it. So that's the reason, for instance, with Stacks, that we're taking the approach we do as a layer 2, right? Okay, let's leave that real trust, settle all of the transactions back to Bitcoin so that like the chain's not going to get reorged because you'd have to reorganize Bitcoin in order to do that. But add the additional programmability where on a layer where you can move faster, you can do things more differently, you can add more complexity to it because you know that the base layer is really simple and really secure to it. But that is something that really made getting some of the financialization and some of these additional assets on top, because ultimately for most things that you would want to do on top of Bitcoin when it comes to especially these more complex deals and automatedly executing things, you have to move your Bitcoin into someone else's custody, right? Because the only way to do it is for whoever is going to execute those trades. Since the chain can't do it itself with a smart contract, it has to go to someone who can do it. And that means trusting that person with your assets, which is a really big lift, right? It's a reason why I think there's far more off-chain lending against Bitcoin than there is on-chain lending. Because again, it goes back to those risk management frameworks and what people know and what they understand, what they're comfortable with, right? It's actually really easy to get someone who runs hundreds of millions or billions of dollars to say like, hey, let's make a tri-party wallet with, a trusted third party, you and the lender, and if the loan covenants are breached, we'll sweep it out and it'll go into a different account. It's like, okay, cool. I understand how to do that because I've taken 14 other types of loans against other assets using that framework on it. If you really want to be able to scale it down too and do things in smaller sizes and with more capability, you've got to have the trustless programming thing. So, with Stacks, we just launched Bitcoin staking last week. I know we'll talk some more about it, or we announced it actually before that. We did our hard fork that's going to enable it. So it'll be available as a full product in the coming weeks. But the reason we did that is we said, what's the number one thing people care about? And the number one thing they care about is, I don't want my Bitcoin leaving my keys. I want to be able to have control over it, whether that's in my own self-custody, whether that's through a qualified custodian like Fireblocks. They want it somewhere that they know and they trust and they can hold it, and enabling that kind of thing while still giving functionality. That is the thing that's been really hard to do with Bitcoin. It's where we put a lot of our effort and our work, and it's somewhere that's where all the advancements going to have to keep going if we want Bitcoin to have that same capability that you see in other places.
Man, that was such a wonderful answer, and you gave me such great transitions, both on the trusted custodian side, but also on the staking side. I want to briefly touch on one point you made and pass this to you, Neil. Something that Alex had mentioned is Fireblocks clients can already access Bitcoin lending and yield directly from their existing custody console. No new wallets, they don't give up their keys, and I'm curious, like, what actually has to exist at the protocol level and at the custody level for institutions to trust that kind of access?
Yeah, I think part of the gap that we have right now is if we look at traditional institutional markets, there's very structured, understood, and defined risks that people need to track and manage against. You have settlement risk and counterparty risk. We now have a whole new realm of technology risk that needs to get assessed and addressed. And the first one is the wallet. How do you address the risk of private key management? How do you select a vendor or a provider who is going to either hold the assets on your behalf and run the keys and manage the keys? Or how do you determine the provider who can provide you with the technology to actually run and manage your own wallets? And then once you get to that layer and understanding, which is where we're starting to see the institutions actually step in, figure out how to do this more directly themselves, it's then a question of what is the technology risk associated with interacting with not a direct centralized counterparty, but a decentralized protocol? How do you then run audits, assess risk on, hey, I'm going to tap into this smart contract and I'm going to pledge my Bitcoin or other asset so that I can now lend against it? These frameworks don't exist in the traditional world. And it's been actually a lot of fun to be at Fireblocks because we're working with the ethos of crypto, not your keys, not your coins. 90% of our customers 5 years ago were saying, we're going to have just peer-to-peer, wallet-to-wallet transactions in the next 3 to 5 years, and all assets are going to be on chain. And then we're now starting to get the traditional institutions stepping in to say, well, hey, no, we're still going to service 90% of the population here, but we're going to be able to do it in a better, faster, cheaper way. It's now really an understanding because, Alex, obviously everything that you guys have built, everything that Fireblocks has done in connecting this ecosystem together is step one. It's now to bring the rest of the traditional world along to now understand what all of this is and what it means. And so I think there's probably a lot of money to be made in sort of the audit world and going out to these institutions to say, here's how you assess technology risk in the context of, again, not just private key and wallet management, but everything that you're ultimately going to be interacting with, because there is a world in the future. I don't know if it's 5, 10, 50 years from now where everything is truly decentralized, but we're starting to see a lot of other assets now coming on chain. And there's a pretty big wave of or narrative around FX and stablecoins. We're seeing stablecoins scale from a payments perspective. Live my life in liquidity management before this. There's real disruption that can happen in cross-border payments. There's more disruption that can happen in FX. And if you can start to get institutional FX coming on chain, having the ability to have permissioned AMMs and pools around that, there's so much utility that can be derived. But again, we need to have the controls, policies, and frameworks in place. It'll get proven down market with the innovators and the folks that are really pushing the envelope. They are then ultimately the ones that will prove out the model that gets repurposed in some ways for the more traditional institutions to step in and scale it. We've seen it in all the cycles we've had with crypto over the years, DeFi summer, NFTs, this, that, and the other. Like, we're seeing DeFi proven. NFTs will have some form of utility, soul-bound tokens. A lot of the disruption you can have in insurance, as an example, with policies. And it's just a whole host of use cases and applications for everything that the innovators have proven over the years and will continue to do so. It's just a question of who's going to adopt it, when, and how.
Man, I hope people are watching this. You guys are killing it right now. You brought up a great point about innovation, and Alex, I'm going to pass this one to you because I know you had made a mention before how you guys are innovating, like laying the foundation for Bitcoin staking. And Bitcoin itself, as you've mentioned as well, it doesn't have a native staking mechanism. So I'm curious, what does it mean to stake Bitcoin, and what had to be solved before you all could make this possible? Without having to ask institutions, for example, to give up custody of their Bitcoin.
Yeah, so you've seen a lot of people talk about different forms of Bitcoin staking over time, and you're never going to really, I think, see Bitcoin staking for securing the Bitcoin network, right? Bitcoin is secured purely through a straight proof of work mechanism. In our case, Stacks is secured through what we call a proof of transfer mechanism, where all of the transactions settle back to the Bitcoin network. Stacks miners bid Bitcoin in order to win the Stacks block. So there's this really inherent tie between the two. And what we sat down about a year ago and we're saying is, okay, how can we let Bitcoin holders participate more directly in that? Because people who held Stacks already acted as validators on the Stacks network and were earning Bitcoin. That's actually the really cool part. Because of how proof of transfer works, you have all this Bitcoin that's generated from mining, from the miners, and that's getting paid out to people holding STX that's locked in the validation process and signing transactions. That's also how we managed to lower transaction times or block times from 10 minutes, air quotes, on Bitcoin to, sub 5 seconds on Stacks. But we said, let's bring Bitcoin into this too. And the way we found to do that is by using Bitcoin to provide economic security on stacks too, right? So Bitcoin's not directly participating in the signing, but if you bring Bitcoin and a very small, about 5% stacks position to it, you can earn a 3% yield on your Bitcoin. And where that Bitcoin comes from is natively, again, in that stacks mining process. So all the stacks miners bid Bitcoin. That Bitcoin then runs through the mining process and gets paid out to people who are holding Bitcoin or holding stacks as part of the process. And our goal ultimately, building this giant economic system, you need a lot of economic security for that system to do it. And so all we say to Bitcoin holders is like, you only have to do two things, right? You have to lock your Bitcoin and you can actually redeem it at any time within a few blocks. So you always kind of have access to it. But again, more importantly, it's in your own wallet. It's on your own qualified custodian. You don't have to take that risk with it. And then you, alongside it, hold about 5% stacks. That gives you also, obviously, the investment in the stacks network. And then you participate, you delegate it to a signer, you stake it with one of our signers or run your own. And now you're helping validate the transactions on the network. So you're providing the economic security, you're helping sign transactions, but you're not having to take risk with that asset that you really care about and that's really important to you. In exchange, like I said, you're going to earn about a 3% yield on an annual basis against your Bitcoin, which otherwise would just kind of be sitting there. We already know we can extend this further, right? So one of the really cool things that we're already working on looking at is, what if you could also take loans against that Bitcoin at the same time that it is locked in consensus? So you are paying, to borrow it, but you're actually earning so much against it, most likely, especially when you look at coverage ratios, right? You're not going to take certainly not more than 50%, but most people don't want to take more than 20 to 25% loan to value against their Bitcoin. But if you're earning 3% against all your Bitcoin and you're paying 6-7% against the 20% you're borrowing, you're actually making money while taking a loan against it and getting liquid on it. And I think that kind of thing is what really enables a lot of very productive uses of Bitcoin, makes it that much easier for people to be able to hold on to it, participate on it, and ultimately create the expansion of that asset, which provides that kind of competition to the rest of the financial system that exists today.
Man, I love that. And briefly, I wanted to ask you too, you'd made a point about speed and, I'm curious, you talked about how you're going to bring Bitcoin transactions down from that 10-minute settlement cycle you mentioned towards 5-second blocks. How does that, and that's amazing.
So you can do that using SBTC, which is kind of the stacks bridged version, secured by a large decentralized signer network of really high reputation signers. The way you do it is basically you use this proof of transfer mechanism, which uses validation in between each Bitcoin block. So it's sort of like this hybrid proof of stake, proof of work network, where you're trusting the stacks network and the stacks signers in between each Bitcoin block. But as soon as a Bitcoin block hits, all of those transactions are hashed and written into that Bitcoin block. And so you can't reorganize the stacks network without also reorganizing Bitcoin in it. And so it kind of gives you the best of both worlds there, the ability to balance on them too. And so we think that's it's a really powerful dynamic. We've seen people doing it. You've got DEXs, you've got all kinds of earning protocols and things on stacks where you can be using that. And that's ultimately the goal, is look, we know that Bitcoin is going to stay relatively in the technical design that it is now. Obviously, I think at some point we're going to get a quantum upgrade. I'm sure there'll be plenty of fights over what exactly that looks like. But, we fought the block size wars. We fought a lot of things. We're not going to see Bitcoin get to the point where it can do 50 or 100,000 transactions a block, or where the block times are 5 seconds or something. And that's fine. If you think of Bitcoin as the digital gold or the asset that's underlying thing, it doesn't actually have to be that much faster than it. But you also can't expect it to scale and become like the basis of a global financial system if only 4,000 transactions per block can happen every 10 minutes. There has to be a way to scale and layer it on top of there. And we think that the design of stacks that we've done with that pairing, still giving the greater speed and capabilities, but keeping the pairing really close, keeping the security really close, is kind of the ideal way to achieve that balance.
Man, I love that. I appreciate that, and thank you for answering it. And Neil, on the Fireblock side, something that Alex had mentioned as well is we're starting to see on the custody side, the lending, staking, stablecoins, and settlement infrastructure. All this is coming together around Bitcoin. And so I'm curious, which piece is the real unlock for you for Bitcoin capital markets? Which piece do you think the market is still underestimating?
Yeah, honestly, I think you had mentioned there's a convergence there. That's exactly what's happening. I don't know that there's one specific catalyst out of that. I think they're all going to sort of prove their own way to convergence, and what that convergence in my mind is capital markets on chain. Bitcoin as that base asset. We look at, and we're not going to go down a monetary policy macro deep dive here, but happy to do that in a follow up at some point. I love that stuff. But if you look at the dollar as the reserve asset globally, all markets revolve around that. If you look at blockchain based markets, historically, since the beginning of blockchain, it's all revolved around Bitcoin. We now have a fundamental question to ask is what is that reserve asset for global markets in the future? We're seeing stable coins unlocked. We're seeing Genius Act, hopefully clarity again, coming down in the next little while that will ultimately allow for dollars to come on chain. We'll see other currencies come on chain as well. Is the dollar going to ultimately be the base asset for blockchain based markets? And is that now going to be the underlying settlement layer for any asset that gets moved on chain? Is Bitcoin going to start to eat into that? But all of those different use cases, applications of the technology, ultimately of Bitcoin itself, moving into a more prominent space in the broader scope of capital markets and financial markets, I think is really critical. The convergence of all of those different use cases. We a couple of weeks ago were part of the DTCC pilot. If you guys saw that, which was super exciting. 12 regulated financial institutions in a production environment, moving treasuries, moving tokenized equities that now have the ability to actually access this and prove again the model. As we get those online, as we prove the utility and continue to scale stable coins as the settlement layer, that's all going to come together. And it's then a question of how does the globalization of that and access to financial markets more globally start to enable it? Because again, you look at more of the macro view of this. I think a lot of people see the US and US capital markets as, hey, it's kind of good enough. But what they don't realize is that everybody offshore cannot access that in an efficient way unless you're in the top 3%. And so I think this unlock, getting assets out there, getting people access to financial markets, financial inclusion, why we're seeing a lot of neobanks and fintech stepping into this space is because they know that there's a gap in underserved or just people that are not served by financial institutions today. And you can hate it all you want. The world needs to revolve around some sort of base asset to exchange value. And whatever that is in the future, I truly believe it's gonna run on chain in a lot of different ways in a lot of different markets. And again, I think we're just really at the beginning of that convergence, but we're gonna really start to see it accelerate over the next couple of years.
Man, what an amazing answer. And I wish that we had known each other before. We have this great regulatory talk coming later today. I would love to have you on it. But
I don't know if the Fireblocks team wants me talking about the regulatory side. I don't really have a filter at times. So
next time we'll vet it through the comms team. I love it, man. And I know you guys are really busy, and I really appreciate both your time. I have one final question for you guys. Neil, I'll kick it off to you first, and thank you both again so much for coming. But, before we end out, just what are you guys most excited about, both for your teams and, what's going on in the industry for the second half of 2026?
Yeah, I think honestly, just the continued acceleration of adoption and convergence. We're starting to see a lot of regulated institutions stepping in. Again, this is the way that we get scale. A lot of maximalists back in the day said, we don't want government involved. We don't want financial institutions involved. That's the only way that this scales. And we've moved beyond just Bitcoin. Bitcoin itself is an incredible asset, and it's something that I think will be around for decades to come. But this blockchain technology is truly transformational. And that's a lot of what Fireblocks is working on, is to say, how do we get these tools in front of institutions to really transform industries that run very manual, inefficient, opaque, decades old systems today and technologies? How can we get them to leapfrog and actually jump in and start to scale? So I think as we start to see new use cases and entrance into this space, that's really the most exciting part. Most exciting part of my job anyway is to see the new novel use cases and things that people are coming up with, because I think everything is ripe for disruption out there. If you know, it's all a shit show. If I'm allowed to say that on here.
Of course you are, and I couldn't agree more. I appreciate that, man. And Alex, over to you. Same
I said,
question.
Neil, I thought this was family friendly programming here, Neil. Come on, man. No,
My bad.
I'm
I told next time I'll be good.
okay. Promise. Yeah, no, the obviously first and most excited for the unbelievable growth of Bitcoin staking on Stacks that we're about to see. More than I think we've obviously been going through a very long, weird year kind of for crypto. It's been up, down, all around. I think you've seen a lot of signs. You can do a lot of reading on why I think we're coming kind of to the end of what I think that is. And it's hopefully looking to a little more stable and continual growth. And I think the thing that's really nice to know is like there has been so much adoption by the traditional financial industry, by new entrants coming in, new folks doing it, that it really gives that solid base for the next generation of growth on it and what the next cycle of it looks like. The funny part is I don't know exactly what it is going to look like, right? We're coming up on almost 4 years. Well, we're 3.5 years since the original launch of Ordinals, which really kind of kicked off the last round of growth and the idea of building on Bitcoin. What's the next cycle look like? What's the really big thing that's a part of it? I don't know exactly. I think it probably does have to do with the continued development of like some new products and things like staking on it. But whatever it is, I think we're right on the cusp of that. I'm really excited to see it and see what folks kind of are coming up with, who comes into it next. And yeah, it's going to be an exciting time for Bitcoin.
Guys, this was a absolute pleasure. Thank you both so much for coming. And I really look forward to doing this again because I have so many questions I didn't get to ask, but really appreciate you guys and amazing. And thank you again. Really appreciate it.
Absolutely. This is great. Thanks for having us.
Anytime. Appreciate it. Thank you guys.
My God, what a talk that was. Thank you all for tuning into Blockhouse. And remember, if you want to get in touch with the speakers, make sure you go RSVP on the Luma. It's the only way that we can help you get in touch with them. If you're interested, you can find the Luma at Real Motion Inc. on Twitter, at WrappedXYZ on Twitter, or luma.com block_house RSVP if you want to get in touch. Stay tuned. We got more for you. And thank you guys for joining us for the inaugural Blockhouse. Let's get back to the show. Yo, what's going on, bro? Oh, you looking for a job? Okay, hold on 1 second. I'm just in the middle of something. Talent is your biggest competitive advantage, but only if you hire right. Morales HR is a human-centered recruiting and executive search firm built for today's business demands, delivering curated, high-quality talent when it matters most. From full-time contract roles across North America, Morales HR connects you to the talent your company needs. Real people, real experience, real results. So if you're falling behind on hiring, frustrated by low-quality candidates, or worried about the rise of fake resumes, go to moraleshr.com and experience a better way to hire. And if you're the one looking for a job, look no further than moraleshr.com. They're here for you too. No black box and no resume sent into the void. You work directly with real people who take the time to understand where you've been and where you want to go. So if you're looking to make your next hire or you're looking for your next job, go to moraleshr.com and experience a better way to move forward.
A brand's reputation isn't built in the real world, it's built online. In the age of AI, malicious actors are using modern tools to attack faster and at a larger scale than ever before. Impersonation accounts and cloned websites are used to target the users of brands of any size that has reach, and they're getting harder to tell from the real thing. This is why Chain Patrol takes on these threats to monitor, block, and take down online threats that prey on the trust of users, protecting your brand so your customers never have to guess what's real.
Hey, everybody. Thank you to our speakers and our audience for tuning in today. This event was created for educational and entertainment purposes only. Nothing said reflects financial, investment, legal, or tax advice. And no statement should be interpreted as a recommendation to buy, sell, or hold any asset. Views expressed are those from the individual speakers, not the hosts or the organizers. Please consult a licensed professional and do your own research before making any financial decisions. Thank you again for tuning in to Blockhouse. Let's get back to the show. All right, everybody, we are back. Thank you for tuning into Blockhouse, and I'm here with two of the goats of the industry, Kevin and Solomon. Thank you guys so much for being here.
Thanks, Will, for having us.
Appreciate you both a ton. And as we get into this, would love to just get to know you a bit better for the audience that's tuning in. So, Kevin, I'll kick it to you first. Tell us a bit about yourself, a bit about Anchorage and what you're working on.
Yeah, I'm the head of policy at Anchorage Digital. I think most people think of Anchorage Digital as a custodian, but we do much more than that. We are the first federally regulated digital asset bank in the U.S. We've had that charter for 5 years. But in addition to custody, we provide stablecoin issuance, staking, settlement services, trading, and we've really become a one-stop shop for institutions.
Amazing. Love it, man. And Solomon, same question to you.
Yeah, so I'm general counsel at Plume. So we're a tokenization startup backed by crypto and TradFi investors. On the TradFi side, we have Apollo, Fidelity's F Prime Fund, Brevin Howard, Nomura through Laser Digital, their VC affiliate. So yeah, we're really trying to target the market that will exist at the intersection of traditional finance and DeFi. And so we've developed a layer 2 using the Arbitrum stack that includes AML compliance at the protocol level. We also have a vault protocol that we developed that we act as an administrator for, and we also curate some vaults. And before this role, I was at the SEC. I was there for about a year and a half. Before that, I was at Uniswap and Chainalysis in the crypto space, and then also worked 8 years in traditional finance at a company called IHS Markit, which is now about 40% of S&P Global. And before that, I worked at the CFTC.
Amazing. And you made this transition so easy for me. I'm going to kick this one over to you first, Solomon. I wanted to get a bit back into the background of policy. So how did you end up getting into this policy work? What interests you about policy? And what are you individually advocating for in Washington right now?
Yeah, so I'm a regulatory lawyer by training. I got kind of my start in DC at the CFTC after Dodd-Frank, after the financial crisis, where CFTC under Gary Gensler got jurisdiction over what was then an unregulated market, the over-the-counter derivatives markets. And so I helped write those rules, both at the staff level, and then I worked for a commissioner where I got exposed to the political side of policymaking. And so kind of jumping back and forth between the political, the policy, the regulatory, the legal has been something I've been doing for my entire career. Digital assets is kind of at a unique place where it's a new technology. It reduces reliance on intermediaries, or it changes their functions. So it requires me to draw from the skill set that I developed early in my career at the CFTC, which is how do we take traditional financial regulatory principles in terms of protecting customers, ensuring market transparency and integrity, promoting capital formation, combating illicit finance. How do we translate those goals into new markets? And so that's what I did at the CFTC as a regulator, a bit more at the SEC, but also in all the roles that I've had, across all the firms that I mentioned before. At Plume, we're targeting the side of the digital asset space that's particularly challenging from a regulatory and policy perspective. Securities investments are heavily regulated across the world, and this technology, has the ability to hit all those, to promote all those regulatory goals that I mentioned. But it requires working very closely with policymakers, and so that's what we've been doing here at Plume. I recently testified at House Financial Services on tokenization back in March, where I laid out a set of recommendations, including suggestions on how to improve clarity and what the SEC can do in that direction. So yeah, this is definitely something that we think about a lot at Plume and in my current role.
I love that, man. And we're going to get into clarity a bit as well. And I'm so grateful for that. thoughtful answer. And Kevin, same question over to you. Would love to know a little bit about your background and what you are advocating for right now.
Yeah, I mean, from a young age, I've always been interested in politics and money, right? So I started working on the Hill right after college, worked there for over 7 years. I worked for the House Financial Services Committee, Whip Emmer, Congressman Barr, on a variety of different financial services issues from banking to monetary policy. And then when the opportunity arose to work at Anchorage, I was very excited to join. And for the last 4 years now, I've been leading government affairs. And most recently, we've been focusing a lot on clarity, access to Fed master accounts, and also the implementation of the Genius Act.
And that's you made this transition so perfect for me. So the Clarity Act has passed the House, Senate Banking Committee, and the Senate's early August recess is really the last window we have this year. I'm curious, and Kevin, I would love to start this with you. Why does this particular bill matter so much to the industry right now for folks who haven't been paying as close attention? And what are the trade-offs that you're seeing if it passes as it's currently written?
I think it'd be a huge unlock for industry. I think you're going to see a lot of capital deployed. I think you're going to see more TradFi in crypto. I think you're going to see more crypto native projects unlocked. So it's going to be a huge win, much like we saw with like Genius, right? That led to a lot of onshoring of foreign stable coins, whether it's Tether, whether it's Athena Labs. We brought both of those to the United States. So really, it just provides the regulatory and legal framework for people to be confident to invest over the next several decades.
Completely agree. And Solomon, same question over to you.
Yeah, I'll just piggyback off of what Kevin said and just give a specific example. So there's Title IV of Clarity lays out a framework for banking regulators. Basically, it says, look, banks can use this technology. And so that's something that the current banking regulators have done through, informal guidance, but having the power of a federal statute, which, every banking regulator, regardless of, who their leadership is appointed by, will have to honor and comply with that statute. So that's really important for banks in particular, because for them to migrate their infrastructure, they don't want to have a situation where they build, they spend the next 2 years, 2.5 years building out to a digital asset infrastructure, and then have future leadership at the banking regulators pull the rug out from under them. It's expensive, it's risky, and so having the force of a federal statute behind those technology upgrades is going to be really critical to bring traditional finance onto blockchain rails.
And this, y'all, this is like one of my favorite conversations. I have so many more questions, but one of the things that I think is important to touch on is like crypto policy and policy in general on the Hill isn't just one fight. There's multiple battles, multiple lines of conversation happening at once, whether it be between regulators, whether it be between legislators, whether it be with lobbying groups. So we've seen stablecoin and banking rules already got resolved in some ways with the Genius Act, while securities and tokenization rules are still very much unsettled. So I'm curious from your perspective, Salman, why does that split matter? And why is Clarity Act actually the thing that closes that gap for people that are just coming to this conversation for the first time?
Yeah, so I'll echo a bit what we just talked about, which is the progress we're seeing when it comes to stablecoin policy is really being pushed forward by the rules that the agencies have to, that Treasury in particular, the banking regulators have to implement under Genius. So that's the reason why we're seeing such, structured progress and a clear endpoint and a lot of investment, across crypto and TradFi to, come up with new mainstream use cases for stablecoins. We don't have something similar when it comes to tokenized securities or crypto assets in general. And so this legislation will provide that structure and that federal backing, legislative backing for those initiatives, which will put them on much more stable footing than if it's done, as discretionary rulemaking. Another key point I'll make, just particularly on tokenized securities, is the bill calls on the SEC to upgrade its rules, or update its rules, I should say, to reflect digital asset technology. That's something that they're going to do anyways. But one of the things that they have to take into account is legal risk when they come up with these new rules. And discretionary rulemaking is going to be much harder for them to defend in a court, particularly by, let's say, incumbents that might want to challenge those rules, and whether The SEC did all the, relevant analysis and met all the procedural requirements. This legislation limits the legal risk for the same policy relative to a world where we don't have this legislation. Speaking specifically for the SEC, and similarly for the CFTC and the other regulators.
I love it. Yeah. And Kevin, on this line of thinking, this past week you were spending time on the Hill. Same question to you, but also how's the appetite feeling on the Hill? Like, how is everyone responding to this? What are you seeing?
Yeah, I think there's a lot of fine tuning around specific provisions right now, whether it's developer protections, illicit finance, some of the agriculture committee language around conflict of interest rules. And then, of course, there's a big political debate over the ethics provision. There's some back and forth going on that. Hopefully, we get a major breakthrough on that, and that's what will spur the bipartisan support we need in the Senate to get this enacted into law and get it over to the House pretty quickly.
I completely agree with that point. And one of the things that I noticed when I was on the Hill talking about this is this idea of like consumer and developer protections. And I think one of the big advocacy points of our whole industry is that we're rooted in consumer and developer empowerment. And so this is very, new native industry that, regulators are doing their best to kind of get ahead of and get with the deal. And it's really reassuring to hear that people are really starting to get it to themselves. Like, we need to pass this regulation. And this kind of brings me to my next point, which is while the U.S. is working through this and taking the time to due diligence and move it through the legislature, the rest of the world hasn't been waiting. The EU MiCA framework is already mature enough that old licenses expired, I think, on July 1st. Hong Kong, Singapore, the UAE, they've all built out their own, as well as South Korea, Japan, and Nigeria are moving through their own legislation for digital assets, while countries like the UK are deliberately taking more time and waiting until 2027 to get it right. So, Kevin, I'll kick this to you first. Do you think the U.S. is maybe falling behind by taking this long, or do you think it's worth taking our time and making sure that we get this right?
Yeah, I think we are starting to fall behind. I will say, though, that we can catch up really quickly. I think that's what we've seen with the Genius Act. When we talk to central banks around the world, a number of them, since the passage of that law in America, have got their act together and started moving forward with their own legislation on stablecoins. I think when the United States and the EU lead on important legislation, the rest of the world takes notice. So I would say we're already in a really good position financially in America. And when we get our legislation passed, it's going to help set the standards, and we're going to do really, really well.
I think the rest of the world is looking to the U.S. from two different lenses. One is for leadership. A lot of jurisdictions are going to follow whatever we do. And then the second is some other jurisdictions are looking at us as a competitor. And so they will be prompted by progress in the U.S. to also accelerate their own plans for making use of this technology consistent with their national priorities. I'm going to give you a specific example, which I think is really interesting. And I talked about this in my testimony from a few months ago. So in Hong Kong, the Hong Kong Monetary Authority published a study in 2023 where they looked at the effects of tokenization on bonds. And they found that tokenizing bonds increase liquidity through features like real-time settlement, through other features like being able to hold fractional shares, which limits the liquidity impact of having large minimum investment amounts, among other things. And they found more liquidity, and the net result of that was for corporate and government borrowers that reduced their cost of capital. And the benefits were so validating that they went ahead and they came up with a program to subsidize corporate issuers to issue their bonds on chain. In contrast, here in the U.S., we have legislation from the early 80s, TEFRA from 1982, which has very punitive withholding tax requirements for bearer bonds. And arguably, most tokenized bonds, particularly if they're directly issued on chain, would probably qualify as bearer bonds. So Hong Kong, which is a part of China, is subsidizing corporate bonds while we still have, legislation on the books that's penalizing a similar type of thing and making it hard for our corporate issuers, for our businesses to take advantage of those, real benefits.
And you bring up a great point, which is, if people are listening to this and they're getting inspired by this conversation, want to participate in how they can help move this forward, like for the folks who are not as well versed in policy and the workings of the Hill as you two are, like what's a way that people can get involved?
You can call your member. So one thing that I like to point out when I talk to members on the Hill, particularly those that are skeptical, is depending on which poll you're looking at, even like the polls that find the smallest amount of crypto investors, we're looking at 10 to 20% of the population, depending on which poll you want to believe, that's invested in these assets. And the demographic that's, the 10% or the 20% or something in between, it tends to be young men, which is a demographic that's, disproportionately, diverse. And this is a population that's been a swing vote. I think it helped deliver the White House to Trump in our last election. For any politician, they should be thinking about, well, how do I respond to this demographic? And so I'm really hoping that lawmakers will act in a way that will improve, the standing and the protections that demographic, really needs. That at the same time will, meet all these, broader geopolitical, competitive economic competitiveness goals at the same time. So to me, it seems clear. One of the things that we're hearing over and over on the Hill is, while we get that, it is I have to go back to my constituents at the same time, and I don't want to get primaried because this is particularly sensitive for Democrats, because I caved to Trump and I blessed some of the Trump administration or the Trump family's shenanigans relating to crypto. So it's a really difficult political calculus that these members have to take into account, and we'll see how it all lands. But hopefully we can get to some kind of resolution on this ethics issue.
Agreed. And Kevin, I saw that you were nodding agreement and you were going to jump in. Please feel free.
Yeah, I think sharing like any personal stories about use cases where digital assets have been helpful. I think like some of the common stories you hear about have to do with maybe friends that in places where the domestic fiat currency is not very stable, and they've had to transfer their domestic currency into, say, stable coins or some other form of crypto, or just kind of the vision that you see. Like one day we're probably all going to be using stable coins to pay for our coffee, the next time as you meet with your friend, or to pay for something, I don't know, maybe make payments on Uber or whatever it may be, right? You open up your digital wallet and you'll have stable coins, whether it's Apple Pay or bank to bank app or something else. And just explaining like how that technology is beneficial to kind of everyone across the board. I think that's really helpful. I think DC really loves anecdotes to share with everyone, in addition like cold hard facts.
Yeah, no question. I mean, that's when I was in DC last. A lot of what I spent my time doing was going and speaking to House Democrats about how, similar to what your point was, Solomon, like the fears that they have around this, partisan politics or bipartisan initiatives. That at the end of the day, what we're trying to move forward is not a partisan issue. It is a American regulatory need, right? We need this innovation to be here. It benefits all Americans, Democrat or Republican. And if we don't end up passing it, unfortunately, we're going to continue to Kevin's earlier point, we're going to continue to fall behind the rest of the world because they're moving this stuff forward. And so I think it's really interesting how, in the same breath, it's about, protecting consumers and protecting Americans. We're actually, doing the opposite by not getting this through. And I was curious, if this does get resolved this session, and I know there's been a lot more effort on both sides of the Democrats and the Republicans to do this. Let's say that it doesn't get resolved this session and, we're back where we started. Does the industry freeze or wait? Does it keep building regardless? What does this mean for the future and how we move things forward if the regulation doesn't get through?
So I think there's actually an opportunity in September if we're not able to prevail before the start of the August recess. We'll have to see how that all plays out. I think post-election it gets more difficult, but I think long term there's already been a big change in DC, almost a 180 in terms of the bipartisan support for things like tokenization and blockchain. I think a lot of people understand that that's the future plumbing of the world financial system. And even if we do have change in leadership in the administration down the road, I think we're going to have like more favorable administrations, whether it's from the left or the right, going down. Yes, like some of the rulemakings that aren't backed by like recent laws like Genius, maybe don't have as strong a footing. But I do think there'll be more marginal changes on a lot of these things. And the evidence for that is the success we've had on some of these other votes, like the repeal of SAB 121, the passage of Genius, right? Just the fact that whenever we have a vote on anything related to crypto now, we usually get between 20 and 40% of Democrats to support it, and nearly all the Republicans. So I think things have just fundamentally changed, and it's because people understand the benefits of these assets. There's with digital assets, you can reduce counterparty risk because you have atomic settlement. The settlement, like with being instantaneous, can even be more affordable. Even national security can be enhanced with digital assets. I think that's one thing that's not talked about enough. Cash is you can't track it all, right? And digital assets, if it's a public blockchain, there are tools you can use to figure out who sent the funds, which can be quite helpful to law enforcement, to national security, and even relative to like traditional banks under BSA. Once those funds leave the bank, they can't trace them. With digital assets, you can transact, or you can watch multiple hops later, multiple transactions later. So there's some real benefits to that, and I think that's starting to win the day. All these different arguments, and that's why I think digital assets are more and more accepted in DC.
Totally agreed. 100%. And Solomon, please go ahead. I saw you had a point you were going to make as well.
Yeah, so I think if Clarity doesn't pass this session, what does the landscape look like next year, and how do crypto companies adapt? One of the things that I think has changed on the Democratic side since the Biden administration is that there's now recognition that regulation by enforcement wasn't an effective policy tool, nor was it good for the Democrats politically. That means that Democrats who are going to have more influence, most likely, next year, are going to be looking at regulation and legislation. And key staffers I've talked to on the Democratic side that represent key offices at the various committees have indicated that if this doesn't pass, they're ready to take up the pen and come up with their own approach. Now, whether the president will sign it, whether they can get sufficient Republican support, when the tables turn, I don't know. But I think policymaking on the Hill will continue after the election, and I think policymaking will also continue at the agencies. So while it won't be as durable, and it won't encourage as the type of adoption that a big bang like a piece of legislation would, I think through the piecemeal regulatory efforts that the agencies will conduct, we'll also see plenty of opportunity for crypto firms to service the market that's going to evolve under these new regulations. So I'm still hopeful that we can make progress on legislation as well. But for sure, we're going to see more regulatory action. And actually, a lot of the regulatory action at the SEC and to a lesser extent, the CFTC has been bottlenecked because they're waiting to see if this legislation is going to pass or not. I think you're going to start to see an avalanche of rulemaking and guidance coming out of the SEC if Clarity doesn't pass.
Yeah, no, and you made it's been a really amazing conversation, gentlemen, and the points you guys have been making are amazing. And Kevin, I noticed when Solomon had been talking about what Dem-led market structure bills could look like, you perked up. I'd love to hear your thoughts on that.
Yeah, I think presumably most people think that the Dems will take the House, right? And possibly even the Senate. That's more of a 50-50 chance there. But you would see, Maxine Waters probably lead efforts to the House Financial Services Committee I think one major difference that you would see in legislation proposed by her versus Republicans is dealing with vertical integration. Gensler talked a lot about this. Atkins at the SEC talks about a super app, right? Kind of one place where all these different financial services and products can be provided. I think what the Democrats would push for is more segregation of these different types of entities. And that I don't know if there's enough support for that among Republicans and industry to get that across the finish line, but that's the flavor I would see the Democrats pushing.
Yeah, I think there's going to be a number of areas where I think Democrats are going to have a different approach. I actually posted a tweet about this earlier today, but one of the areas will be in terms of who gets the lion's share of the market. I think Democrats are going to be are going to give more authority to the SEC than the CFTC. I think that's one very likely outcome. That just seems to be the zeitgeist on the Democratic side. I think also when it comes to illicit finance and regulation of DeFi, I think they will probably go a little bit deeper into the DeFi supply chain than Clarity did. I do think there will be developer protections as well, but they may end up being narrower than what we see in Clarity, which would not be generally good for DeFi as it is, but for institutional DeFi that it might be a worthwhile trade-off.
Yeah, no, it's going to be a really interesting, future. And I think, not just with the federal legislation that's happening, and we can maybe do a follow-up on this, is also, I would recommend everybody pay attention to your local and your state elections, because, as we start to unlock more federal regulation, it's going to allow the states to become more empowered, more emboldened, and give them the baton to start to pass things through as well. So really encourage everybody that's listening to this episode, follow these speakers and their companies and what they're doing so that you can stay informed and pay attention to what's happening in your state and in your country, because this is really important stuff. And I really want to say a very special thank you to both of you for the work you're doing on the Hill, to all the trade associations, all the lobby groups, and all the companies and individuals, because this is this historic moment where we're setting the future for our industry and builders and folks to come for many years. So thank you both a ton. I have one final question for the two of you. And Kevin, I'd love to start with you. Looking into the second half of the year, what are you most excited about, both with Anchorage, both with policy? Just, what are you looking forward to?
I think we're going to have more exciting news on stablecoin issuance. I think that's going to really grow. Not only at Anchorage, but across the board for everyone. I think the predictions where the stablecoin market's going to be over $1 trillion by like 2030 or more. I think that's pretty accurate. The other thing is Fed master account access. I think there's going to be a lot of developments on that because of the executive order, the rulemaking with the Fed. So I'm tracking that closely.
Yeah, I think in the real world asset space, what the SEC is going to come up with under the innovation exemption and all the other initiatives that they've announced and will likely announce if Clarity doesn't pass is really going to help accelerate that market. Right now, it's growing at about 5 to 8% a year, so roughly doubling in size every year. That's going to fall short of a lot of the ambitious projections we've seen from major banks and consulting firms and global financial authorities, the World Economic Forum, etc. That's going to be what the SEC ends up doing in the next few months, starting in the next few months, but probably extending it over the next couple of years. I think is going to help unlock the exponential growth needed to get to those outcomes.
Man, well, thank you both so much. I have so many more questions, but we'll save it for the next time. I'm sure the audience is rearing for more, but thank you, gentlemen, so much. I know you're both incredibly busy and really can't express enough how grateful I am for the work that you are doing, your companies are doing, and helping our industry get this stuff passed. So thank you both a ton.
Thanks for setting this up.
Thanks, Red.
My God, what a talk that was. Thank you all for tuning into Blockhouse. And remember, if you want to get in touch with the speakers, make sure you go RSVP on the Luma. It's the only way that we can help you get in touch with them. If you're interested, you can find the Luma at Real Motion Inc. on Twitter, at WrappedXYZ on Twitter, or luma.com/block_house RSVP if you want to get in touch. Stay tuned. We got more for you. And thank you guys for joining us for the inaugural Blockhouse. Let's get back to the show. Yo, what's going on, bro? Oh, you looking for a job? Okay, hold on 1 second. I'm just in the middle of something. Talent is your biggest competitive advantage, but only if you hire right. Morales HR is a human-centered recruiting and executive search firm built for today's business demands, delivering curated, high-quality talent when it matters most. From full-time contract roles across North America, Morales HR connects you to the talent your company needs. Real people, real experience, real results. So if you're falling behind on hiring, frustrated by low-quality candidates, or worried about the rise of fake resumes, go to moraleshr.com and experience a better way to hire. And if you're the one looking for a job, look no further than moraleshr.com. They're here for you too. No black box and no resume sent into the void. You work directly with real people who take the time to understand where you've been and where you want to go. So if you're looking to make your next hire or you're looking for your next job, go to moraleshr.com and experience a better way to move forward.
A brand's reputation isn't built in the real world, it's built online. In the age of AI, malicious actors are using modern tools to attack faster and at a larger scale than ever before. Impersonation accounts and cloned websites are used to target the users of brands of any size that has reach, and they're getting harder to tell from the real thing. This is why Chain Patrol takes on these threats to monitor, block, and take down online threats that prey on the trust of users, protecting your brand so your customers never have to guess what's real.
Hey everybody, I'm Will from Real Motion, otherwise known as Living with Will, otherwise known as a human being. Thank you guys for tuning in to the inaugural Blockhouse. It means the world to me that you're here. If you're looking to do some marketing, if you're looking to make some great content, or you're looking to do some amazing events, reach out to myself at Real Motion Inc. or Living with Will, and Mark and I are happy to help however we can, whether it's a wrapped event, whether it's a Real Motion affair. You let us know and we'll take good care of you. Thank you so much for being here for Blockhouse, and let's keep it going, y'all. Have a wonderful day, and I love you. Hey, everybody. Thank you to our speakers and our audience for tuning in today. This event was created for educational and entertainment purposes only. Nothing said reflects financial, investment, legal, or tax advice, and no statement should be interpreted as a recommendation to buy, sell, or hold any asset. Views expressed are those from the individual speakers, not the hosts or the organizers. Please consult a licensed professional and do your own research before making any financial decisions. Thank you again for tuning in to Blockhouse. Let's get back to the show. My God, what a talk that was. Thank you all for tuning into Blockhouse. And remember, if you want to get in touch with the speakers, make sure you go RSVP on the Luma. It's the only way that we can help you get in touch with them if you're interested. You can find the Luma at Real Motion Inc. on Twitter, at WrappedXYZ on Twitter, or luma.com block_house RSVP if you want to get in touch. Stay tuned. We got more for you. And thank you guys for joining us for the inaugural Blockhouse. Let's get back to the show. Yo, what's going on, bro? Oh, you looking for a job? Okay, hold on 1 second. I'm just in the middle of something. Talent is your biggest competitive advantage, but only if you hire right. Morales HR is a human-centered recruiting and executive search firm built for today's business demands, delivering curated, high-quality talent when it matters most. From full-time contract roles across North America, Morales HR connects you to the talent your company needs. Real people, real experience, real results. So if you're falling behind on hiring, frustrated by low-quality candidates, or worried about the rise of fake resumes, go to moraleshr.com and experience a better way to hire. And if you're the one looking for a job, look no further than moraleshr.com. They're here for you too. No black box and no resume sent into the void. You work directly with real people who take the time to understand where you've been and where you want to go. So if you're looking to make your next hire or you're looking for your next job, go to moraleshr.com and experience a better way to move forward. All right, everybody, we are back with another one of our GOAT speakers. Jim, I'm so grateful for you to be here, man. Thanks for coming on.
Thanks for having me. It's always good to hang with you.
Yeah, this is amazing. And, before we get into it's great to see you again, but I know that there's folks that are tuning in. This might be their first time. So as we get into it, can you tell us a little bit about who you are and what you're working on with LeFi?
Yeah, sure. So I'm Jim. I lead technical sales and solutions engineering at LeFi. Come by the way of acquisition. So I've been at LeFi for past year and a half. Before then, I was a founder of a cross-chain bridge called Catalyst that LeFi acquired about a year and a half ago. And so been in kind of a product leadership role for the past year or so at LeFi. And most recently, I actually switched to being more of an enterprise sales, technical sales role. And that's because my main priority now at LeFi is institutions. And so I meet with financial institutions. I meet with leading financial and fintech enterprises to actually integrate our brand new stack with them, right? And so we integrate into RWAs, on-chain stocks, stablecoins, other asset issuance. So excited to talk about what I do, what I see every day working with these financial institutions. So happy to be here.
Yeah, so are we. And thank you, man. I really appreciate that. And, it's a great segue because we've seen, as people come more and more on chain, as markets come more on chain, we're now seeing things like tokenized stocks being traded, perps futures, and individual equities, early tokenized IPOs. All this is happening all at once. And this is kind of what we meant when we were calling this topic the 24/7 Wall Street. What does that look like today? And how far does it go? In your opinion, where does this take us?
Yeah, I mean, honestly, I think it's early days, right? It's I think the vision everyone agrees on, 24/7 accessibility into brand new asset classes that, traditional on-chain users wouldn't be able to get access into, right? To get access into, US stocks or Western stocks, has historically been kind of gated towards, maybe mainly US residents or other kind of jurisdiction requirements. But they are, I would say, as an American, the primary way of value and wealth accrual within the United States, right? We're taught from young to buy into different ETFs, buy into different funds, buy S&P 500. And that has paid off really, really handsomely for, the generations before us, but even our generation, right? And so to not have that access for people who live in other jurisdictions, in the global South, for example, I think is kind of a disservice. And so that vision is very much what gets me super excited. I think looking at what I do day to day and looking at the current state now, we're not quite there yet, right? I think we're very much at kind of the precipice of a really big societal shift of embracing those things. But the net of it is it's coming on. Liquidity is decent, right? It's certainly a fraction of what it could be, but it's decent. People get access, which is really great. People are buying and holding. These assets are holding pegged, right? And so I think we're at early innings, but I like what I see, and I think we have a lot more to go.
Yeah, I completely agree, man. And I love the point that you made about accessibility as well, because that's always been one of the things that gets me the most excited about this industry is just the way that we can democratize all these things that, if you're in a country like ours, they seem kind of just like a normal part of life. But if you're in a different part of the world, this is all very novel and new, and it affords the same luxuries that our country gets. So I love it, man. That was couldn't have said it better. Really appreciate that. And we've been talking about this, Mark and I, off camera about things, for example, like NASDAQ getting approval to extend trading hours. There's being real progress made in the TradFi systems to kind of adapt now that these on-chain markets are just, changing the game across the world. it's not always the case, right? So what do you think TradFi is doing, like in these conversations that you're having, that you really are excited about to close that gap and make it more democratized, more decentralized, more in the Web3 ethos? Or is this just an edge that we're always going to have on traditional markets?
Yeah, that's a really good question. I don't really have a definitive answer for you. I always think that there's going to be an edge of building in like open permissionless systems that just have like way less overhead than legacy systems, right? It's like when you think about the concept of market hours, it's not like someone all of a sudden decided that, or from the inception decided that, these should be the market hours. It should be, traded within these specific days. There was kind of like a trade-off between what is the operational overhead of like having markets open versus not, right? And that was kind of where the natural market kind of landed over the past, at this point, even like 100 years. And so it's just an assumption that hasn't really been revisited, but was very much decided based on like trade-offs of like benefit versus, maintenance and costs and other overhead, right? And so we have like in crypto have the ability to like rethink it from first principles and like offer 24/7. I do like the idea that legacy systems are trying to, make it more accessible, right? And I think like the reason why I personally feel strongly about making it more accessible is not only kind of what we talked about in terms of different users getting access to this, but even like as someone who has access to these traditional systems, you are kind of, there's always really rapid price movements when you look at like before hours, when you look at after hours, right, of certain markets. And that movement is actually really dangerous because, you can fill orders within those hours. And, because the price movements are so drastic or even drastic as on the opening bell, that is like dangerous for people, right? Especially if they're on leverage, especially if they're on, like levered ETFs, especially if they're trading options, derivatives, right? And so that is really, really tough. And I think you actually kind of smooth that out when you provide more 24/7 access. And sure, there's the trade-off of like, now you're always on and, you're never really stopping. But we've actually observed that within crypto markets for like the past like decade plus. Well, honestly, like 2 decades at this point, nearly. And honestly, like it hasn't really been super bad. If anything, it makes it a more global market, right? Because you have movements of US hours, you have movements of European hours, Asian hours. It is definitely, I think, like very much solidified into its own heartbeat, basically. And there hasn't really been a big detriment. So I feel like people who throw that argument of like, always being on and everything being a detriment is not necessarily proven to be the case.
I love that. Man, how do you know all this? Like, if someone's watching this, they're like, wow, Jim is like the most informed person I've ever heard. Like, what are some of the resources that you'd point people to like get educated to how these things work and how these markets move?
It's hard to say. Like, obviously, I'm sure there's online resources, right? I'm sure there's like really good YouTubers and really good just like resources. I think asking Claude, honestly, is a pretty good start in this day and age. I mean, for me, it was just like an accumulation of a ton of interest, right? It's like being taught, I guess, from an early age to be financially responsible, right? Like max out your 401k and like then you have to like select what your 401k is allocated towards, and you learn about the S&P 500, you learn about the NASDAQ, you learn about tech stocks, stuff like that. And so like gradually you kind of get deeper into it. And obviously like 2020 with like meme stocks and Robinhood was a really big kind of eye-opening moment for myself and my peers about like how to really interact with all these financial instruments. And so over time, like I kind of just accumulated knowledge. I don't really know how to like advise someone who's starting from scratch outside of just like asking Claude, also just like rolling up your sleeve, like trying out this stuff, right? Having an interest, especially around like AI stocks and all these like upcoming IPOs or new IPOs like SK Hynix and stuff like that. Yeah, that's broadly what I advise people. Just like chase your interest necessarily and just go down the rabbit hole organically as possible.
Yeah, 100%. No, that's really wonderful direction for anybody who's listening. And that's on this note. And you gave me such a good transition. I tripped over my words. You'd mentioned things like Robinhood, and my next question was going to be like on this aspect of tokenized stocks the emergence of them over this past year. Robinhood Chain has been driving a lot of this and has added hundreds of thousands of holders in a month alone. Institutions are now becoming direct partners and issuers. And so this is not like a, passive engagement. This is like very active participation. What do you think convinced these institutions and these players in more TradFi scenarios like Robinhood? I know they skew somewhere in between, but what do you think has convinced them so much to build towards this infrastructure and own this on their own instead?
I can only speculate, right? I'm not sitting in those meeting rooms, unfortunately. I would say the opportunity is just so big, right? Like when you look at the margins of like being a traditional brokerage or broker dealer, like what Robinhood is providing, there's a good amount of margin to be made. But if you look at something like, the New York Stock Exchange, for example, or like NASDAQ, there's just more opportunity to be made, right? And so I think it kind of makes sense where if you wanted to build it from scratch, you're going to use next generation technology. You can use, on-chain stocks. They did the exercise in deciding if it was better to do their own chain or if it was better to use an existing chain. They went with their own chain, which I think is totally fair, given their scale and kind of the plans that they have in the future for how much scale they want to bring on chain. And then you can capture a lot of that all the way down, right? You capture the market dynamics of like being your own matching venue, basically. You capture the sequencing fees or block space fees that you have from being your own chain. And so it was worth the trade-off for them in terms of building a lot of those stuff from scratch, basically. That's at least how I would have handled it if I were in those rooms.
Yeah, no question. And it was a great answer. The same thing is happening, as stocks are getting tokenized, assets are getting tokenized, and they can also live on multiple chains at once. I'm curious, what actually has to happen behind the scenes to move value or execute a trade across those chains in real time without the user ever noticing complexity or without any like insane volatility across chains?
I think we're still trying to figure that out, honestly. Like I said, it's still early innings for this asset class on chain. I will say that broadly, the most important piece is honestly the infrastructure that we've built as a crypto ecosystem for the past like 3+ years, which is just like interoperability tooling, interoperability infrastructure. So at DeFi, like our bread and butter has always been what we call like routing or orchestration. And basically what that means is with more fragmentation, as you see with chains and asset types of those chains, right? Like different denominations of USDC and now like other denominations of USD stablecoin. And now with like on-chain stocks and other forms of RWAs, there is just like a proliferation of just, assets and venues that people can get access to. And for us, like we've built a way to basically abstract all that, right? We have a orchestration engine that basically does the routing such that if you have one token on one chain and you want to get, Ondo SPY on Binance Smart Chain, exactly, what are the steps to take in order to do so, right? Where are you swapping? Where are you bridging? You also know what is the cheapest, right? What has like the deepest liquidity based on that routing. And so that has been like really, really helpful in terms of ensuring that the user experience is as good as possible. And then when you go to the point of like, having SPY being issued within a ton of different RWA providers, like I said, I think we're still early innings of like ensuring that they are as close as possible, right? It ultimately becomes like a liquidity issue, but it's pretty good given the infrastructure that we've built, right? With this routing. And on top of it, not to go into like a big interoperability rabbit hole, but where there's also solvers that are also facilitating that as well, right? So basically these third parties, many times licensed market makers, who are actually able to facilitate the swaps in and out of certain assets. And many times they can even do it for, these various RWA providers. So you can swap from Xstocks to Ondo to Robinhood, relatively easily, given the infrastructure that we built from, the interoperability perspective.
Man, you gave me such an easy transition with that and also a phenomenal answer. A lot of the biggest trading and fintech apps are starting to route through your infra. the users that are using these different applications or working through these different firms, they don't ever see you all's name. I'm curious why this has been such, like, just working through it. Like, this is a winning model. Obviously, you guys are doing phenomenally well. Was it a conscious decision to have this be somewhat of an invisible infra, or was it like a conscious choice? And is this something that you think more folks should be doing, is building invisible rails and not focusing so much on consumer facing brands?
Where do I start? I think I'll start in a weird sidetrack slash segue it into an actual accurate answer for you. So when I was a founder at Catalyst, I believed very strongly in strong brand marketing, which is, where you and I met and you gave me a ton of really good advice on how to navigate socials and brand and product marketing and all that good stuff. I would say I still value that a lot, but I think LeFi has a bit of a different perspective, honestly. And our perspective is to be quiet and to really just execute. And, I think our sales team, our commercials team is some of the best in the entire space, right? And so the more I think public you are, the more firepower I think you give your competitors for very little gain, right? You can argue maybe word of mouth and eyeball distribution is helpful from a marketing perspective. I think our sales engine, our commercial engine is so good that we don't really necessarily need to talk about it too often because it's just that good, right? And we already get inbound because of the scale that we reach. And so we're very much of the camp of like, hey, we're not going to really publicize too much of what we do because we're in the business of winning, honestly. So I don't know if I'm allowed to say that, but it is what it is. They put me on here. So that's kind of like the mentality that we have. And in terms of being more of a, headless or white label solution, I mean, ultimately, we're trying to help our integrators. We are in every major wallet at this point, every major front end in crypto. And we're obviously expanding way beyond that into fintechs and traditional finance. We want them to be successful. We want them to own their customer relationships. They are the ones bringing their own customer base. They're the ones bringing their own brand to it. And we just want to be able to offer an experience that is up to bar of what they want to provide for their users, right? And so we're not really trying to steal their limelight because we greatly benefit from them doing well, basically.
Man, I can't wait to clip that. We're in the business of winning. That is one of the best lines we've heard in the entire Blockhouse inaugural event. And I completely agree with it, and it depends on the person. Like, some folks, it might move things forward to be more consumer focused. Some folks, it might. I completely agree with everything you said, though. And I think folks that listen to this should really take notes, focus on what's driving your ROI and your KPIs and focus on that, and everything else is noise. Focus on the signal. You're in the business of winning. So if most users have never seen you all directly, how do the institutions and the apps route through you all, knowing that you're the best? How do they get to the point? Is it just through these sales pipelines, or how are they hearing about LeFi?
So I want to preface that I think every company is different, right? I in no way think that, doing brand, if you're Phantom, for example, you should be doing brand marketing. You are a B2C product, right? And in many ways, even if you're an ecosystem, like Hyperliquid, for example, marketing is totally warranted. I think when you're a B2B product, it's kind of a toss up, right? But for us, what we've chosen, this is the DNA of Philip and our founding team and everyone that he's kind of hired under him. We're very much really, really proud of the sales and commercials pipeline and process that we've built. And so, how do institutions, how do enterprises hear about us is through that, right? It's very much through outbound. It's through word of mouth of our existing clients, referrals of our existing clients. We have a very, very rich pipeline from that alone, right? And honestly, as a former founder, I've learned a lot from this type of environment, which was very different than kind of how I operated Catalyst.
I'm learning a lot listening to you right now. I appreciate you guys and the team, and I think it's an incredible ethos. And and it's clearly working. So it's awesome. We've heard this has been a really great talk, Jim. I really appreciate it. I got a couple more questions for you. I know you're a busy man, but I have to ask a couple more. We've heard about some tokenized stocks that are, whether it be, there's a myriad of different tokenized stocks, right? You have ones that are actually debt securities trading a stock price. They're not real equity. You have ones that are no voting rights. They're just exposure. And so that we've started to see as institutions come on board, as these financial applications come on board, we've also seen regulators start to pay closer and closer attention, both in the positive sense of rolling things out like Genius Act and, trying to get Clarity Act passed. But we've also seen the SEC start to draw a line between issuer-backed tokens and these more synthetic ones. Does that distinction matter to buyers? And is this industry moving towards one of predominantly real ownership in this regard? Or is it still, putting people in a place of like exposure and risk? Like, what are your thoughts on that?
I would say that there's a world for both. I'm going to be as diplomatic as possible. I think there's a world for both because ultimately it's about trade-offs, right? About, I guess, user like knowledge or education, rather, user education. And I think there are benefits to synthetics that are are worth having in the marketplace. And I think there are benefits to more of a direct kind of transfer agent type relationship of a direct equity that should be had. And so our POV as LeFi is that we are in the business of helping our clients and getting, as much liquidity, as much distribution, as much exposure to these asset classes, to the users, to our enterprise clients, our B2B integrators, as much as possible, right? Now we draw a bar. Don't get me wrong. Like we draw a bar at, we're not going to be surfacing things that we don't feel comfortable personally. But I haven't personally. I don't think anyone on the team has seen that case yet. Like every team working in this space are very, very high quality teams. They're well funded. They're high ethics. They're incredibly smart. I've had a really big pleasure working with a lot of them. And yeah, I think they're just making a trade-off in terms of what the mechanism is. But I think there's a place for both of them. And yeah, I think people should get exposure to whatever they feel comfortable.
Your answers have been phenomenal, dude. You would be a good politician. I'm not gonna lie. So I
I'm
have
training,
two
man.
final questions.
Running for New York mayor.
Oh yeah, man. Listen, I'd vote for him. Okay, so I have two final questions for you, Jim, and thank you again for coming out, man. The first one is we were talking a little bit before the show started, and we were talking about naming this 24/7 Wall Street. You made a mention about how you're not necessarily sure about it being 24/7, and I just thought it was a really awesome opinion. Do you mind elaborating on that a bit?
I don't know if this is going to be a super hot take, but I'm also like a little autistic, so I never know like what I'm going to say is going to like really resonate with people or like piss people off. I think we're a bit away from 24/7 Wall Street. It's kind of what I alluded to originally, where I like the vision. I just think we have a long way to go, very much like early innings within this industry, right? And why do I say that? I say that because, I do work with a lot of these issuers and issuing platforms / protocols. And, I'm based in New York. I'm kind of in and out of these offices every day at this point. And I think there's still structural limitations to offering like 24/7 Wall Street, right? Like, for example, if you have a direct relationship to a transfer agent, so your on-chain equity is very much backed by actual, certificates that is traded within any sort of exchange. That does not have 24/7 nature to it, right? Because if you wanted to request for the underlying, that is operating within market hours, right? And so that is kind of restriction. Now, if you look at synthetics, which have less of that kind of underlying backing, underlying restriction, you still kind of encounter different restrictions in the form of liquidity, right? And so if you have a synthetic that is tied or bounded from a price movement to an underlying asset that's trying to track, well, if it's not tradable within certain hours, right? If it's not tradable in the weekend, if it's not tradable after hours, it may depeg, and then they may have to go back to whatever baseline is or whatever the opening bell price is, right? And so that is not 24/7 Wall Street, because it's more like a tracking of a market hours Wall Street, basically. Now, there's nothing wrong with that. Like if you're a buyer and holder, like what I'm, a big advocate for accessibility from other users and other global users, that's perfectly fine, because ultimately, it's going to track it directionally on both ends, and you're not trying to move in and out of it very quickly. But if you are, or if you have a derivative on top of it, then I think you're going to run into some issues. And then you also have the piece about liquidity, right? It's like you're not going to have the same liquidity as what's traded on the NASDAQ or New York Stock Exchange. So if you are buying or are trying to exit a big clip of a specific asset, like SPY, for example, it's not going to have the same the same ability to absorb that price impact as what you can do with a traditional venue. So I still think we're a really long way to go. I also think it's maybe a definitional thing, right? It's what does 24/7 Wall Street mean? But for me, it's 24/7 and then the liquidity of Wall Street. And I think we're pretty long ways to go for both those pieces.
Jim, you're the GOAT. I have so many more questions for you, man, but I appreciate your thoughtfulness, the way that you approach these questions and your answers. And yeah, we're kindred spirits, man. I really appreciate you. In the last minute that we have here, I'm really curious, what are you most excited about going into the second half of 2026, both for LeFi and just as a member of this broader Web3 decentralized community? What are you excited about for the rest of the year?
I very much think, and I feel this in my bones, that we are on a precipice of an absolute RWA explosion, right? It's I'm having conversations with names that, I would not even have imagined would even consider crypto and blockchain and Web3 honestly, even 3 years ago, right? And that is really exciting, and they're incredibly well-versed. They've hired a lot of crypto natives to lead these conversations, lead these divisions. And so they are taking this very, very seriously, right? And so I'm having very in-depth conversations about what does it mean to do asset issuance? What does it mean to have mint and burn access? What does it mean to pick, a home chain versus having a multi-chain strategy? It's really in-depth, right? And so I can only imagine that they're either curious or they're already bought in, and it's just a matter of time for literally trillions of dollars to move on chain. So really, really exciting stuff. Like I said, this is early innings. I think we have a long way to go, but I think directionally we're trending in the right space. And yeah, I mean, it's only a matter of time before something good happens, I guess.
I completely agree, man. Now, and we've had a common theme on the Blockhouse inaugural event today. We've had, whether it be the RWA season themes that we heard from you and from DeFi Dave, from Cap, or it's this idea of the agentic future that we've heard from folks like Coinbase and Realign Labs. So, I just love how I agree with you. We got greener pastures ahead, and we've weathered some pretty brutal storms as an industry and as a community. So it's up only from this perspective. But as always, y'all, it's NFA. And Jim, I'm so grateful for you, man. This was a wonderful. You got to do more of these, man. We got to have you back.
Happy to. Yeah, man. Thanks for having me. Always a pleasure.
My God, what a talk that was. Thank you all for tuning into Blockhouse. And remember, if you want to get in touch with the speakers, make sure you go RSVP on the Luma. It's the only way that we can help you get in touch with them. If you're interested, you can find the Luma at Real Motion Inc. on Twitter, at WrappedXYZ on Twitter, or luma.com block_house RSVP if you want to get in touch. Stay tuned. We got more for you. And thank you guys for joining us for the inaugural Blockhouse. Let's get back to the show. Yo, what's going on, bro? Oh, you're looking for a job? Okay, hold on 1 second. I'm just in the middle of something. Talent is your biggest competitive advantage, but only if you hire right. Morales HR is a human-centered recruiting and executive search firm built for today's business demands, delivering curated, high-quality talent when it matters most. From full-time contract roles across North America, Morales HR connects you to the talent your company needs. Real people, real experience, real results. So if you're falling behind on hiring, frustrated by low-quality candidates, or worried about the rise of fake resumes, go to moraleshr.com and experience a better way to hire. And if you're the one looking for a job, look no further than moraleshr.com. They're here for you too. No black box and no resume sent into the void. You work directly with real people who take the time to understand where you've been and where you want to go. So if you're looking to make your next hire or you're looking for your next job, go to moraleshr.com and experience a better way to move forward.
A brand's reputation isn't built in the real world, it's built online. In the age of AI, malicious actors are using modern tools to attack faster and at a larger scale than ever before. Impersonation accounts and cloned websites are used to target the users of brands of any size that has reach, and they're getting harder to tell from the real thing. This is why Chain Patrol takes on these threats to monitor, block, and take down online threats that prey on the trust of users, protecting your brand so your customers never have to guess what's real.
Hey everybody, I'm Will from Real Motion, otherwise known as Living with Will, otherwise known as a human being. Thank you guys for tuning in to the inaugural Blockhouse. It means the world to me that you're here. If you're looking to do some marketing, if you're looking to make some great content, or you're looking to do some amazing events, reach out to myself at Real Motion Inc. or Living with Will, and Mark and I are happy to help however we can, whether it's a wrapped event, whether it's a Real Motion affair. You let us know and we'll take good care of you. Thank you so much for being here for Blockhouse, and let's keep it going, y'all. Have a wonderful day, and I love you. Hey everybody, thank you to our speakers and our audience for tuning in today. This event was created for educational and entertainment purposes only. Nothing said reflects financial, investment, legal, or tax advice, and no statement should be interpreted as a recommendation to buy, sell, or hold any asset. Views expressed are those from the individual speakers, not the hosts or the organizers. Please consult a licensed professional and do your own research before making any financial decisions. Thank you again for tuning in to Blockhouse. Let's get back to the show. My God, what a talk that was. Thank you all for tuning into Blockhouse. And remember, if you want to get in touch with the speakers, make sure you go RSVP on the Luma. It's the only way that we can help you get in touch with them if you're interested. You can find the Luma at Real Motion Inc. on Twitter, at WrappedXYZ on Twitter, or luma.com block_house RSVP if you want to get in touch. Stay tuned. We got more for you. And thank you guys for joining us for the inaugural Blockhouse. Let's get back to the show. Yo, what's going on, bro? Oh, you're looking for a job? Okay, hold on 1 second. I'm just in the middle of something. Talent is your biggest competitive advantage, but only if you hire right. Morales HR is a human-centered recruiting and executive search firm built for today's business demands, delivering curated, high-quality talent when it matters most. From full-time contract roles across North America, Morales HR connects you to the talent your company needs. Real people, real experience, real results. So if you're falling behind on hiring, frustrated by low-quality candidates, or worried about the rise of fake resumes, go to moraleshr.com and experience a better way to hire. And if you're the one looking for a job, look no further than moraleshr.com. They're here for you too. No black box and no resume sent into the void. You work directly with real people who take the time to understand where you've been and where you want to go. So if you're looking to make your next hire or you're looking for your next job, go to moraleshr.com and experience a better way to move forward.
A brand's reputation isn't built in the real world, it's built online. In the age of AI, malicious actors are using modern tools to attack faster and at a larger scale than ever before. Impersonation accounts and cloned websites are used to target the users of brands of any size that has reach, and they're getting harder to tell from the real thing. This is why Chain Patrol takes on these threats to monitor, block, and take down online threats that prey on the trust of users, protecting your brand so your customers never have to guess what's real.
All right, everybody, welcome back. We're here live at Blockhouse. I'm so grateful for these incredible speakers. We have a wonderful talk for you guys today, and thank you all again for joining us and rocking with us today.
Thank you for having us.
Great to be here.
Before we get into like the crux of our conversation, I'd love for you all to just introduce yourself to our audience. So, Brig, why don't we kick it off with you? Tell us a bit about yourself, what you're working on.
Sure. I'm Brigham Adams. I'm the technical co-founder at Realign Labs. And we're creating context and governance infrastructure for the agentic web. So couldn't be more happy to be at this panel today.
Amazing. And thank you for coming again. And Dean, kicking it over to you, man. Same question.
Sure. I've spent most of my career on the question of how do you let software act on your behalf without giving it all your authority? And that led to working on the first production smart contract in the late 80s, so quite a bit before blockchain, secure distributed systems at Sun Microsystems and Microsoft, and then most recently doing cross-chain orchestration at Agoric. And so we're building an app using that, WiMAX, which is a cross-chain non-custodial capital allocation platform. So enabling safe agentic deployment of capital to be able to do that when you're not paying attention. And so it lets users delegate their authority to a contract that will then enforce the rules so that you can safely use agents.
Amazing. And finally, Lincoln, back to you. Tell us a little bit about yourself and what you are building.
Yeah, totally. Thanks for having me. I'm Lincoln. I'm the products lead for Coinbase's AI trading and payments initiatives. Been at Coinbase for about 2 or so years now. In that time, I created AgentKit, which was a very early implementation of an agentic wallet. My team built X402, Coinbase Advisor, and now I'm primarily thinking about and working on Coinbase for Agents, which is our CLI MCP to give agents a primary financial account.
Incredible. Well, thank you all so much. I feel incredibly lucky to be talking with the three of you. And let's just jump right in. Lincoln, I'm going to go to you first for this one. We've been looking at how AI and agents have been moving real capital on-chain and off-chain. And this was a future scenario people were building for, but now it's our present reality and it's happening today. What does it look like for trustworthy capital deployment to come on-chain? And how are you guys building towards that at Coinbase?
Yeah, it's been fascinating to watch this evolution of users interacting with agents. And it's been, in some sense, analogous to how we've seen the rollout of self-driving cars, where initially you had stage 1, stage 2, and it was able to parallel park for you. And people thought that was insane and crazy and that they would never let a car drive themselves on a highway. And now we see Waymos popping up everywhere, and you don't even really think about it anymore if you're used to taking them. And we're seeing the same sort of gradual progression and increase in both the user trust of these systems, but also the tools and services that allow for greater agent autonomy. The question around like what happens if my AI agent goes rogue with my money and all of this is one of the most common things that gets brought up by the average consumer. And Coinbase is building guardrails and limits and whatnot to help protect against that inside a user's account, as well as isolated portfolios and all the other features to allow your agent to trade autonomously safely. Fortunately, we haven't seen any major issues in production yet, but this is also for our custodial rails. And I'm sure the other panelists have a lot to say around these on-chain edge cases and not, which I'm very curious to hear about.
Yeah, and thank you so much for that transition. Dean, this is what you were speaking about in your intro and kind of where WiMAX is porting in. Would love to hear your answer for this question as well.
From our perspective, our focus is on agents enabling humans and agents helping humans to deploy their capital or helping humans to accomplish things on chain. And fundamentally, you can't trust the agents. They don't think like we do. They're very, very smart idiot savants that will come up with amazing things, but can go off the rails. Just recently, there was a mere $200,000 loss where an agent just got talked out of its money. It wasn't a security breach. There was no compromise of systems. It was just that an agent believed something it shouldn't have and went off the rails. And that's not something that you're going to improve by getting that better training there. You improve that by having the environment around the agent enforce the rules. So no matter what the agent tries to do, it can't take my money and send it to somebody else. It can only take my money and trade with this in the prescribed venues on the tokens that I care about or on the assets that I care about with the limits that I, the human who actually owns that money, sets. And so that's, a lot of the goal there is to make sure that the infrastructure around agents ensures that the humans stay sovereign over the humans' assets. And that enables us to actually unleash the power of agents. You're no longer worrying about what they might do. You know what they can do, and you're okay with that. And now it's free to innovate and be as powerful as it can be within the limits that you prescribe. And that's, to me, sort of the hard thing. And people, we talked about this. We started presenting about this back in 2024, and now everyone talks about guardrails. But it's very important how you achieve those in order to actually protect people's money.
Agreed. And these segues have been so phenomenal. Thank you guys so much. Brig, going to you with this, we're talking about how we can safeguard, how we can entrust agents, and we're bringing finance and privacy and compliance into the same breath as AI agents. And it's colliding fast, both on-chain and off-chain, agents needing to transact, and this happening increasingly. How do you approach this? What does privacy actually mean in this regard? And how would you approach this as well?
Yeah, so privacy could be getting a significant upgrade in this agentic era. Agents can actually kind of be the perfect middleman for a lot of different scenarios where a human customer wants to share some private information but doesn't necessarily want to share it with a human. And agents could end up being the perfect middlemen in those sorts of scenarios. But that all depends on, as Dean was saying, our ability to constrain the agent's behavior. Because once the agent has the information, we need to make sure that they're not sending it out to places that it isn't meant to go. So what we're doing at Realign Labs is creating some infrastructure both to define the guardrails around agent behavior and then also to enforce those guardrails on the agent's behavior. What that looks like ultimately, and I can say more about this as we talk today, is secure enclaves in which agents can act, and then we can attest that the data they worked with was never leaving that enclave.
I love it. Now, I could talk about this for hours with you guys. And we're broaching a lot of different conversations, right? From constraining agents for privacy concerns, for security concerns, for compliance concerns. And something that Dean had mentioned as well is kind of this, the interest of security. And you had mentioned an attack recently which used a prompt injection. There was a malicious instruction hidden somewhere. Essentially, it was able to talk the agent out of giving its money away. And so I'm interested in, Lincoln, I'll go to you first with this one, and then we'll go to you, Dean. How are you all approaching this aspect of crypto security, AI security? What is actually possible, and what are the gaps that we need to expose and fix?
Yeah, so in terms of the actual transactions and execution and whatnot, anecdotally, we haven't seen a ton of issues in production, fortunately. That's not to say that they haven't happened, but I think the volume of agents that are interacting are such that these edge cases haven't necessarily been uncovered yet. The area where I see the biggest gap in terms of how we bring on more buyers and sellers into this agentic marketplace is probably around identity and reputation. It's something that's largely discussed, but never actually actioned on. And that's both because of a lack of maturity of the space and a general confusion around what the right structure is. I trust going on eBay or Craigslist or any one of these marketplaces because there's a system of reputation that enables me to know that the seller that I'm buying from is going to send me my goods. And the same exact thing is true in this world of agents as well. If we assume that there's going to be a long tail of services that are being provisioned and whatnot, if I want to go off and pay for that agent to do a task, I want to know that that agent isn't just going to take my funds and do nothing with it. Thus far, given that we're interacting primarily through microtransactions, it hasn't been a massive issue. If I lose a quarter, that's unfortunate, but it's not the end of the world, and I'll just never interact with that again. But that's one of the gaps in the market that I see from the payments side that needs to be addressed, and likely will be addressed by a variety of different solutions going forward.
I love that. And Dean, I see you smiling. I see you. Please feel free to take your.
Yeah, I got to bring some controversy in. So I love Lincoln's answer, but I also disagree. Agents, this goes back to agents don't think like us. There is no real accountability for agents. This agent misbehaves, I shoot it in the head and no one mourns, right? It has no history. It has no hostages to fortune. It has no house. It has no worry about how it's going to perform in 10 years. So there's a level of accountability that our intuitions think we should be able to get that you simply can never have, anytime in the foreseeable future for agents. And this is why you can't protect the system by, watching the barn and closing the door after the horse leaves, as the old phrase goes, right? You can't log your way into it. You can't train it better. Because the fact that it did not rug yesterday doesn't mean it won't rug tomorrow, because it had a better idea and it just doesn't grow and evolve and think like we do. And so, there is value for reputation things exactly in the scenario that Lincoln talked about, where I'm doing incremental payments. I'm at risk a bounded amount. And if I lose that, I'm just going to walk away. It's not worth the dispute. We're just done. And so I am bounding my risk that way. But it is vastly superior to have agents come up with code that can then be run in a confined system in a deterministic fashion, have agents that they don't have direct authority. They are executing a high level intent that is then implemented by deterministic systems. And I know, Coinbase has their permissioning system that they add onto what are agents allowed to do that provides similar kinds of, guardrails outside. And so I think that, reputations would not have helped this 200,000 breach. That loss of $200,000 is really much, much more significant than it sounds like, because the agent market is so early and nascent. This is just the beginning of that kind of failure. And so the question I always want to ask is not what do I expect the agent to do? What might it do? What has it done? But what could it do? And that's the matter of what can I enforce around it. So the only things it can do are the things that I can live with. Well, and some of that is what it can do is request an escalation to the human to do a trade that it's not allowed to do. Or it can do, it can deploy my money into a lower interest rate vault rather than a higher interest rate vault. So it can do its job poorly, but nothing it can do can transfer my money to someone else, as an example of the kind of rule I would like to have. Or nothing it can do can move into a vault that has a particular collateral. So I can have a mandate that's enforced without having to rely on the reputation. I just rely on the underlying system.
And Brig, I saw you nodding agreement. Go ahead, please.
Plus one. Yeah, I mean, these things are stochastic systems, and that's what's great about them. But that's also what makes them so so difficult and so problematic. And the reason, Dean, I think you're absolutely right about this. The reason we're only seeing a few prototypes make it out to market over the last 18 months is because these things are unpredictable and unsafe. I want to see an agentic frontier that's full of agents that are doing all of their genius things, but they're properly constrained, where they have to pre-register, these are the sorts of actions they might take, particularly when we're talking about egress from a secure enclave in our environment. But also, for payments, sensitive data, we want to have ways that they can share that data with a third party without actually ever being seen by the agent at all. This is what we're working on, is that the very infrastructure that makes this possible.
Can I add one more follow-up? The reputation stuff is huge. It's very important. For me, it's not important for security. it's important for value, right? So I want the reputation of an agent that does a great job at highlighting risks early, or does a great job at finding and discovering the right yields, or reacting, or trading the right things. You just can't rely on that for security. You just want to rely on it for performance. And then reputation is hugely important.
We could have both. You could have a reputation scoring system that includes performance and trust. Yeah.
I love that. And speaking to this, like, once an agent can move money on its own, it is important that we have something like some guardrails, some way of stopping this. I think the usual answer that, in speaking with folks is an audit after the fact situation, but like kind of a supervisor agent, if you will. But obviously the way that money is moving on chain and the speed that these transactions are happening, it seems like that would make it technically impossible for us to stop these bad actors. So I'm curious, and Lincoln, would love to start with you on this. How do we stop bad actions from happening? Is it impossible? Would love to hear your thoughts on this.
I think Dean and Brigham both brought up great points around the sort of guardrails and tools that we can put in place to ensure that the agents are only interacting in the way that you want them to. I imagine that there will always be some level of fraud that occurs, as is with any system that exists today. There's always going to be some ability to break the rules. It's a bit of a cat and mouse game, but for sometimes the cat has the advantage, other times the mouse has the advantage. It's really just a matter of continual advancements and making sure that when those breaks happen, there is a proactive response that results in the blast radius of that exploit being as minimal as possible.
Dean, I seen you nodding to that. Did you want to jump in?
Yeah, we work very hard to make secure systems that can find things and restrict them, but defense in depth is exactly that. So these things that we have as more frontline defense, like audit in the traditional world, they don't have the same protection, but they're still critical. Right, they're still critical for confining the blast, preventing it from happening. Tracing down who the bad actors are, because often there'll be a human or organization behind it, and those things that as Lincoln says, Coinbase does a lot of and does well. A thing that you mostly can't do is achieve more security by adding more rules to a particular agent that's trying to act. You can't, as we know, you can't say, "Oh, that thing you were doing, don't do that one." Just stay within some particular area, because it will go off the rails again. And so that goes back to either hard guardrails or soft guardrails with other agents. And I think Lincoln, you guys have been doing some stuff with that as well. And so being able to have deterministic rules, human processes, and organizational processes behind that, as Lincoln alluded to, that helps make the system of execution robust and keep going is critical. In the non-custodial world, you want all those things as well, right? You want the strong enforcement. You want the kind of enforcement that WiMAX provides of guardrails, or that Brigham has been talking about. But you also have governance processes outside that humans and organizations participate in to make sure that when things do go off the rails, and they will, the damage is contained, the damage is not repeated, the systems adapt, and people put in the clever hooks they missed. I mean, with strong enforcement, it is still the case that users can say, "Hey, I want to buy that meme coin, and I'm willing to take an 80% slippage." And if they can say that, they're at really high risk, because when the agent is following their instructions. And so you're never 100%.
Right. No question. And Brig, just closing out this point, would love to go to you to kind of close this out. What can we do? What are you all working on to kind of address this as well?
We're working on this problem both at design time and at runtime. As I was saying before, I think a lot more agents aren't deployed because they aren't properly constrained, and they're not properly constrained because at this point early on in the agentic era, we don't know all the guardrails that need to be put in place to drastically decrease the chance of the agent doing something that would be harmful to a customer. at design time, we actually need some way of discovering those guardrails. And we have a tool called Agent Arbitrator. This thing is really nifty and exciting. It's a simulation environment where we pulled in, 1 million businesses and use cases into a game theory engine that will then run out different scenarios between an agent and another agent, or an agent and a human, and discover the best set of kind of guardrails. We call them atoms, policy atoms, but guardrails is how they're talked about. The best set of guardrails that you can apply onto your agent, so that we get the upside of an agent being clever and making decisions, so to say, as it goes along, but not so much of the downside. So that system, Agent Arbitrator, is something that agent designers can use at design time to discover, the hundreds or thousands of little atomic guardrails that they can apply onto their agent. That works pretty well, except in scenarios where, like, as Dean says, it's plausible that an agent can be talked into giving up all of its rule set, and for that we have a runtime environment that we call the Citadel. Here we're really focused on keeping an air gap between a human's private data and a third-party agent. And so we have their interaction happening in a trusted execution environment, and it's intermediated by what we call a docent, which is a small language model that we've really trained to make sure that no information is passing from the human's knowledge vault to the agent unless it's been pre-registered. So there's a registry for agents where they can say, like, here are all the different kinds of actions that we would take. Here are the places in our workflows where we want to have an egress or call out to another tool. And all of that has to be pre-registered in advance and approved. And when you have that scenario where you have a great set of guardrails and you have kind of people talk about it sometimes as a supervising agent, and it's an entrusted execution environment, where we can actually measure whether there's any data that's leaking out of that trusted execution environment before burning it down after a session. When you add all of those things together, we actually end up with a scenario where the agent is quite well governed. So that's where we're taking it.
That's incredibly exciting. And I can already tell there's some great partnership business opportunities between the three of you as building in very complementary ways. And Lincoln, I wanted to kind of bring it back over to you. There's been few people in the industry that have kind of done more for moving the Web3 industry along, as well as bringing AI in this agentic era into just bringing it to market and bringing it to the people. I'd love to talk a little bit about, as we're talking about safeguarding and protecting people that are using this, kind of what you are building to allow them to use it and what you are developing.
Yeah, totally. So we have a couple of different products oriented toward agents. The one that everyone knows is X402. It's our internet native payments protocol. At this point now, it's more than just a Coinbase thing. It's actually been extended into a open source project underneath its own Linux run foundation, alongside partners like Cloudflare, Stripe, AWS, Visa, MasterCard, Amex, Shopify, and so on. So this is our attempt to create this standard on which we think internet native payments will happen. And we view it as a very nice inflection point that converges with AI agents. The other thing that we're working on a lot is Coinbase for Agents. It is our CLI MCP product. The idea there is to allow agents to plug into your existing Coinbase account, do so using an isolated portfolio, be able to pay and trade, manage your money, really do whatever you want, however powerful you might want it. If you're a more straightforward, simple user, you don't want to set up an agent inside Claude Code, or you have concerns about the agent providing you with sound recommendations, then I would recommend Coinbase Advisor, which is a new product that we actually just released inside the Coinbase app. It's rolling out iteratively now, and the whole idea there, it is SEC licensed fiduciary advice to allow you to ask your agent What should I invest in? How do I get exposure to space? All of these different questions and queries that you might have, we have an agent that will give you an actionable recommendation with a widget you can directly tap inside the Coinbase interface to make that trade happen.
No big deal. That's amazing. And
Yeah, it's
Dean,
been fun.
yeah, I can't imagine. I can't imagine. I have so many more questions, y'all. I know that we're getting tight on time. Dean, I'm curious, as we're talking about all the things like what Coinbase is allowing people to do with agents as we continue to move further and further into this new era, there's a lot of coordination that's happening around, agents triggering rapid correlated crashes in DeFi markets, for example, and individually safe agents can still create these system-wide risks, right? I'm curious how are you guys approaching solving this at YMAX? Is this solvable? And kind of talk us through a little bit about how you're looking at that.
So, in some sense, that's a fundamental market risk. It doesn't really have anything to do with agents per se. Whether there was the 1987 crash where everyone was investing in the right, particular kinds of instruments, or in 2010, high frequency trading took a crash because the high frequency trading didn't have the right kind of rate limits and circuit breakers. And so once one of them went off the rails, the rest of them followed them over the cliff. And so that's a system design problem. Now, the thing about agents is, or at least agents where part of the motivation we hear from customers is users want their own customized strategies, right? We ship this thing where people could do single signature deployment of assets out into, vaults across multiple different chains. And user said, "This is great. I love it. Can you automate it for me? And oh, by the way, I just want this one little custom thing. And I want it to all work as the world gets more and more complicated. Can you do that for me?" So that one little custom thing means even with broad adoption, you will see uncorrelated behavior, and there's still that tail risk that everyone wants to get in on the next big thing. And so you have some bad behavior, but the power of agents actually is giving many more actors with many more different directions and motivations. And so I expect you'll actually see less risk there than you have in current systems.
I love it. Y'all, I have so many more questions, but I know we're getting close to the end here. So, Dean, I'm going to take it back to you. First of all, thank you guys so much for your time. I have so many more questions to ask, but talk a little bit about what you're excited about that you are working on. What's next for you going into the second half of 2026 here?
Sure. So we started talking about guardrails a long time ago. The particular thing that's most important to lead with is they don't provide brakes. What they do is they enable agents to shine, right? If you can safely unleash them, because guardrails enable you to feel comfortable, that is, to me, the critical unlock for enabling people to cross the trust gap. So I'm very much looking forward to rolling that out to treasury partners that have been putting money into YMAX, to customers that are using it, integrating with other services out there, where we can go from our single signature deployment now to agents enabling that, automating that, and then rapidly being able to absorb more of both Web3 and beyond of these financial instruments that, Web3 started the process of democratizing them and making them available to many more people in many more places. Agentics lets us bring some expertise to it so that an individual person that has a day job doing not financial analysis, can actually go and participate in these markets and win from them. I can protect my assets and grow them over time. And I'm really excited to be shipping product that helps enable that.
I am too, man. This has been, I can't wait to see what you all are working on. And Brig, same question to you. I know this is, very much aligned with what you are building. So would love to hear, similar to you, what's next for Realign Labs.
It's a super exciting time for us because we've been building these different products with their own multiple services. So the arbitrator is going to be available in the latter half of 2026. We also have been getting the Citadel going, and we'll have the Wiser AI registry coming online as well. So all of these tools for agent builders so that they can cross that gap and get to a place where their agents are safe on that frontier. So it's going to be a lot of work, but we're already pretty deep into it, and it's very exciting. Great time for us.
I love it, man. Thank you so much. And Lincoln, closing out with you, we'd love to hear what's next for Coinbase. What's next for you going into the second half of this year?
There's an experiment, a hypothesis that I've wanted to test for a long time, and it's finally about to come true. So I think there's a very compelling opportunity to help catalyze this agentic payments by leveraging one of the core strengths that Coinbase has, which is distribution over trading. Thus far, we've seen a lot of supply side interest and excitement around agentic payments, lots of infrastructure providers, but we're still lacking that real catalyzing moment or just these early flywheels that enable agentic payments to really start taking off. And I'm very excited for Coinbase for Agents to start enabling users to pay for X402 endpoints using their retail USDC balances. So what this will enable is an agent to go off and pay for data from a data provider that exists, like Nansen or Glassnode or Artemis or any one of these, and then use that to make more well-informed trading decisions, therefore increasing the value and getting this access to proprietary premium data. There's a blog post from Vitalik from around 2017, 2018, where he hypothesized that agents will be the primary traders on low liquidity prediction markets because the cost for them to do data analysis and reasoning is so much lower than it is for humans that it doesn't make sense for us to think about this. So we're going to be launching this within the next week or so. And I'm quite excited to see how people interact with this, if they interact with this at all, where we can find some of these sticky, early exciting moments for agentic payments and trading.
Man, I'm excited for that as well. And I'm so grateful for you guys' time. Thank you for coming in and joining us at Blockhouse. And y'all make sure you follow the speakers, follow their companies, follow their journeys, and stay tuned because they're cooking, y'all. Thank you guys so much again. This was incredible. My God, what a talk that was. Thank you all for tuning into Blockhouse. And remember, if you want to get in touch with the speakers, make sure you go RSVP on the Luma. It's the only way that we can help you get in touch with them. If you're interested, you can find the Luma at Real Motion Inc. on Twitter, at WrappedXYZ on Twitter, or luma.com/block_house RSVP if you want to get in touch. Stay tuned. We got more for you. And thank you guys for joining us for the inaugural Blockhouse. Let's get back to the show. Yo, what's going on, bro? Oh, you looking for a job? Okay, hold on 1 second. I'm just in the middle of something. Talent is your biggest competitive advantage, but only if you hire right. Morales HR is a human-centered recruiting and executive search firm built for today's business demands, delivering curated, high-quality talent when it matters most. From full-time contract roles across North America, Morales HR connects you to the talent your company needs. Real people, real experience, real results. So if you're falling behind on hiring, frustrated by low-quality candidates, or worried about the rise of fake resumes, go to moraleshr.com and experience a better way to hire. And if you're the one looking for a job, look no further than moraleshr.com. They're here for you too. No black box and no resume sent into the void. You work directly with real people who take the time to understand where you've been and where you want to go. So if you're looking to make your next hire or you're looking for your next job, go to moraleshr.com and experience a better way to move forward.
A brand's reputation isn't built in the real world, it's built online. In the age of AI, malicious actors are using modern tools to attack faster and at a larger scale than ever before. Impersonation accounts and cloned websites are used to target the users of brands of any size that has reach, and they're getting harder to tell from the real thing. This is why Chain Patrol takes on these threats to monitor, block, and take down online threats that prey on the trust of users, protecting your brand so your customers never have to guess what's real.
Hey everybody, I'm Will from Real Motion, otherwise known as Living with Will, otherwise known as a human being. Thank you guys for tuning in to the inaugural Blockhouse. It means the world to me that you're here. If you're looking to do some marketing, if you're looking to make some great content, or you're looking to do some amazing events, reach out to myself at Real Motion Inc. or Living with Will, and Mark and I are happy to help however we can. Whether it's a Wrapped event, whether it's a Real Motion affair, you let us know and we'll take good care of you. Thank you so much for being here for Blockhouse, and let's keep it going, y'all. Have a wonderful day, and I love you. Hey, everybody. Thank you to our speakers and our audience for tuning in today. This event was created for educational and entertainment purposes only. Nothing said reflects financial, investment, legal, or tax advice, and no statement should be interpreted as a recommendation to buy, sell, or hold any asset. Views expressed are those from the individual speakers, not the hosts or the organizers. Please consult a licensed professional and do your own research before making any financial decisions. Thank you again for tuning in to Blockhouse. Let's get back to the show. My God, what a talk that was. Thank you all for tuning into Blockhouse. And remember, if you want to get in touch with the speakers, make sure you go RSVP on the Luma. It's the only way that we can help you get in touch with them if you're interested. You can find the Luma at Real Motion Inc. on Twitter, at WrappedXYZ on Twitter, or luma.com block_house RSVP if you want to get in touch. Stay tuned. We got more for you. And thank you guys for joining us for the inaugural Blockhouse. Let's get back to the show. All right, everybody, we are back yet again. Thank you so much for tuning into Blockhouse. We're here to talk about the new era of confidential finance, and I'm here with the GOAT himself. Howard, man, thank you so much for coming. We're so excited that you're here.
I'm glad to be here, Will.
Thank you, man. And you know, while we're getting into it, you know, you and I have met before, but I would love for the audience who's not as familiar, just tell us a little bit about yourself and what you're building.
Sure. Well, I'm Howard. I'm the founder of Aleo and also the CEO of Provable. We've been building out Shield Wallet this year, which is a privacy-first multi-asset wallet. We also have something exciting coming up in the next week that I'm happy to talk about as well. And I think it's going to lead right into the segment, which is basically ushering in this new era of confidential finance.
Very exciting, man. And I'm curious, before we get into the topic, like, you know, what were you doing before this? Like, how did you get into the field of crypto and Web3 and technology? Like, how did that journey begin?
Well, I've always been a techie since I was a kid, so this has always been kind of my calling. I got in crypto when I was in high school. Actually, I was really into mining and into Bitcoin mining at the time, and it wasn't until my time in university where I started to get into the research side, the cryptography side. So, you know, I really have taken a very academic approach to it. We actually started Aleo based on a research paper about how to build private smart contracts. You know, originally, the lab that I was in, my advisors are all co-founders of Zcash, and so, you know, we built out this system, this framework for what is effectively private Bitcoin, and we were asking ourselves, how do we build private Ethereum? And so that was actually the inception that sparked Aleo. We started the company 7 years ago, and then basically throughout in 2024, we then launched with Coinbase as our day one launch partner, and ever since we've now been building up the stack towards more and more greater things.
Man, I love that. And I love all the, you know, the shout outs to other, you know, cryptographer and privacy oriented folks in the space. And I know today we're talking a little bit about privacy, but we're really leaning into this, what you've coined as the new era of DeFi and confidential finance. So I'm curious for the folks that are tuning in and that are curious of what this means, like, what does confidential finance and this new era mean to you?
Well, first off, I think that you see that crypto, generally speaking, is growing up. We're institutionalizing. You know, the stablecoin movement in the past 2 years has been incredible. We've also seen on the regulatory side now there's Genius, there's Clarity in the US. These are all things that I think are very much instrumental to the evolution of this space in this industry. And what I think is going to start to happen is that we're going to start to see a lot of TradFi move onto crypto rails as time goes on. And in order to do that successfully, we need to be prepared. I think one of the biggest gaps in the market today is the lack of confidentiality and proper compliance for crypto rails. And what I mean is that when you look back 10 years ago, everyone was arguing and debating about TPS, you know, who has the faster chain, who can process more transactions, who has more throughput, all this stuff. That's now pretty much been solved. Like, that is no longer the blocker. And yet, you know, people still ask, why hasn't crypto gone mainstream? You know, why aren't our parents using it? Why isn't this still? And to be honest, I think my answer would be privacy. Confidentiality is the last mile. It is the thing that is missing. And I think it is also the great enabler that will allow people to start to use this. To give you an example, right? When you sign into your bank account today, your best friend doesn't see your balance. Your parents aren't looking at how much you're making in that account or how much you're spending or where you're spending it, right? Like they don't see, and other people can't see that stuff. But if I were to send some money to my best friend or send some money to like my parents with USDC on Ethereum, for example, they now know my wallet balance. They know my wallet address. They can now see everything, how much I make, how much I spend, where I spend it, yada, yada, right? That's, in my opinion, a broken user journey of money. That is not how money works in practice. And Web3 has not done much to solve it. So I think that this is a very clear example of where on-chain finance needs to go. It needs to start to demonstrate and grow up and basically provide some level of protection to the user journey itself.
I love that, man. And you know, some of the reasons that I got in this industry in the first place, right, is it touches on a lot of this. We've had conversations today talking about how this relates to data and the importance of making data more private as it relates to AI. We've talked about the need for more regulation. You know, we're talking about the Clarity Act and the Genius Act. So I really appreciate this, you know, view of confidentiality in finance. And, you know, but on the other side, I'm curious, you know, when most people were talking about blockchain for a long time, there was this idea of it being transparent, being one of the main core cruxes of it, like public ledgers. I'm curious how you would speak to someone who's listening to this and agrees with you on everything that you just said, the same way that I do. But then at the same time, they're looking at how blockchain transparency is one of the pros of the industry. So I'm completely with you. But what would you say to someone like that hears this and brings that to you?
Well, I'd start by saying, first off, the transparency of blockchains is both its greatest strength and its greatest weakness. Satoshi himself even said back in the day that if it were possible to make Bitcoin have full privacy, they would have. And you can go onto the Bitcoin Talk forums and go see actually Satoshi was playing around with the idea of zero knowledge proofs even back in the day, trying to figure out if there was a way to do this. And Satoshi wasn't able to figure that out. And so, you know, I think that this concept has been very intrinsic to the space. So, you know, just leading with that, I would just say more broadly speaking, there is ways to strike a balance. Just like when you look at the early internet era, when everything was completely unencrypted, all web traffic was unencrypted. Everything you send, anyone along the wires could see it. That created a lot of downstream implications. What do I mean by that? You couldn't put your credit card number on a website. Why? Because the minute you hit send, anyone along that wire between you and the website could then read your credit card details, steal your identity, and go take your money. And that was a huge issue. And then if you guys remember, like, you know, a decade or two ago, we started getting the padlock on your URLs, right? And like that meant that we introduced this thing called HTTPS, which was to secure your website connections. And that introduced end-to-end encryption and end-to-end tunneling so that when you're sending your details over the wire, people aren't seeing your credit card. And what did that lead to? It led to the explosion, this extreme Cambrian explosion of e-commerce. And because of that, trillions of dollars of value was created from that. And so this is where I say, like, when you look at it from an analogy standpoint, with blockchains, we're almost in the same world as where the internet was in the 90s, where basically everything is unencrypted, everyone can see everything, and because of that, it behaves more like a phone book than anything. You know, like it's like in the 90s, you go to Hilton.com, and like it's like, here's a picture of our hotel, here's like the address, here's the phone number, call us if you want to make a reservation, right? And like obviously that's not how this works today. Today, everyone is now on websites where you're effectively making bookings on there. You have an account, you're storing your details, all this stuff, right? And like that is kind of the magic. And so, you know, from my point of view, I think that this is where the technology is going to go, because this is going to unlock so much of the user journey for crypto that doesn't exist in the real world today.
Wow. Yeah, no, that makes a lot of sense. And I appreciate the answer. And you know, we're talking about this as it relates to like the average person. But when I'm hearing you talk about this, you know, I think about things like government and all this institutional and government attention that's coming into crypto. How are they going to be able to participate when everything's on chain, right? Like, and transparent. I'm curious how, you know, you look at this when it comes to hedge funds and governments. Is this something that is being built with them in mind, or is this more of a consumer-minded approach?
Well, I think that historically, crypto has not had anyone's mind in approach. You know, this was this was really built by technologists for technologists. And I think we're now starting to usher in this era where we're introducing this technology into these different domains and these different camps. And so when it comes to like financial institutions or when it comes to regulators, they absolutely need to play a part in this. And I think that this is where history is going to kind of show itself or write itself correctly, that in order for them to participate, these rails need to maturize. And as part of that, we're going to start to see confidentiality and compliance be a part of those rails.
Man, I appreciate that a ton. Now, let's talk about the elephant in the room a little bit, because this is something that, people that have been around crypto long enough, when they hear about privacy, they're going to think about Zcash or they're going to think about something like Tornado Cash. So I'm curious, for you, when we're talking about this era of confidential finance, what is the difference for you between private and compliance? Because as we talk about this, like confidentiality and compliance sometimes can sound like a contradiction. So, walk me through this. Can you have both?
You absolutely can. Let me put it this way. Every new technology has good actors and bad actors. And this has always been the case. When you look at even the early internet itself, you had companies and technologies like Napster and Spotify. Both were pieces of software that let you download music from the internet and listen to it. But one said, we're going to do it for free and circumvent the entire system. And the other said, no, we're going to integrate with publishers and artists and charge a nominal fee to the user. And it's clear, one, which stood the test of time. But more importantly, it's also clear, two, which generated billions of dollars of value for artists everywhere. And I think that you see the same thing happening here in crypto as well, especially within this space around privacy and compliance, that, you had things like Tornado Cash, which absolutely were trying to circumvent the system. And then you have new chains and new technologies, for example, like Aleo and Shield, where effectively this is now plugging into financial institutions. It's working with regulation to make sure that there is a compliant and confidential framework that is coherent for people to use. And I think that this is the version that's going to stand the test of time and also generate trillions of dollars of value for everyone around the world.
Yeah, I love that. And so following this line of thinking, there's been a lot of public debate around DeFi needing KYC or lack or not wanting KYC, right? It's not a popular take in crypto to KYC. It's something that a lot of people have, for various reasons, have their qualms with. And then there's another side of the field that is very much advocating for it. I'd love for you to speak on this a bit, in the way that you choose to.
Yeah, well, let me just start by saying that I don't think everything in DeFi needs KYC. But I do think that certain things are going to as we start to maturize and evolve. And what I mean is this: look, everyone is talking about tokenizing RWAs, right? Like, stocks, bonds, real estate, you name it, whatever it may be. People want to bring these things on chain. In every other medium on planet Earth where these things are traded, there is always KYC in those venues. That has just been the rule. Like, you go to the New York Stock Exchange and like they need to know who you are. That's the law. And I think it's going to be no different in crypto. But again, that doesn't mean that everything in crypto is going to need KYC. It means the assets themselves that need to be protected and regulated are going to be. And from my perspective, I will say, maybe it's a bit of a controversial take, but like, I don't think KYC in its current form is going to work in crypto. I just don't believe that the model that we've used, which is effectively a very centralized model where people are uploading driver's licenses and passport photos and selfies of themselves onto a website to be stored in a database just for hackers to be able to break in, is going to stand the test of time. I really think that model is broken, and we're even seeing it on the internet today. Increasingly there's age verification, there's websites that are starting to do this. And I'm personally, while I'm an advocate and a supporter of protecting, for example, children online to make sure that they're not accessing content they're not supposed to. I also think that there are more privacy preserving ways of enforcing these types of age verifications and, generally speaking, KYC broadly, that protect the user's personal data, that allows them to retain control over their information and doesn't compromise them when hackers inevitably breach things. The example I like to point to is, look at Experian. It's like the largest credit union probably in the world. And like, it's over here just getting hacked, and hackers are leaking social security numbers and home addresses and phone numbers and people's sensitive details. And this has serious downstream implications. And I don't think we can be doing the same thing with people's passport data, with their driver's licenses, with all this stuff. Like, this is all sensitive information. So what I'm advocating for is that when these things come on chain, there's going to be a need to introduce privacy preserving KYC. And this is where I'd say like the field of zero knowledge proofs, the field of cryptography, generally speaking, has truly built solutions that can actually solve for this. And I think that this is an opportunity to really take advantage of where the technology has been. Like 10 years ago, the things that I'm telling you right now would not have been possible. Right now, this is something that is very much now finally practical because the research has gotten there and computing, like chips themselves have advanced to the point where it's now practical. I can now start to show you, for example, that I'm over the age of 18. I can prove to you mathematically I'm over the age of 18 without revealing to you even my date of birth, without revealing to you my driver's license details, like my home address, my eye color, you know, like any of this stuff, my blood type, whatever it may be that's on your driver's license, right? And like those are things that I would think are sensitive, that, you know, if you're going to upload it online, there's a risk that it very much could get lost, stolen, and get sold on the internet, and that's a problem. So I think that in the same way for that, in crypto and certainly on Web3 rails, like this problem only becomes broader in the sense that like blockchains are immutable. They're going to store this information permanently. So we cannot have a system where this type of data just lives on chain. And more so, we need a system that's actually going to vet this stuff correctly. And this is where I think the magic of cryptography and zero knowledge proof specifically is actually a really good answer.
Yeah, no, I'm picking up everything you're putting down. I'm sure many people who are listening as well. And I completely agree. I think ZK technology, this is the exact intended use that I think we'll start to see it proliferate more and more into like the regular world, quote unquote. But I want to bring it back to you. I could take this on such a tangent, man. This is so fascinating to me. But I want to take it a bit back to Shield, because this is something that you mentioned earlier, that you have a Shield wallet and that there's like some new Shield oriented magic on the horizon. So can you talk to us a little bit about what you're building and how it works for folks who are listening?
Yeah, I'll stop teasing you guys with it. But basically, look, like we launched Shield Wallet at ETH Denver this year, and it's gotten a lot of great traction already. You know, it is one of the first multi-asset privacy wallets in the market, period. You know, we support Wrap Bitcoin, Ethereum, Solana, Circle natively issues USDC on it, Paxos has USAD on it, Hyperlane also has bridges, Nears plugged into it. So, you know, it has all the kind of functionalities you'd expect from a wallet. And we're now taking it to the next stage, which is we're building out something called Shield Swap. The idea here is to really create a broader finance portfolio that allows for people to be able to swap to own assets and trade without, one, revealing your identity, two, without revealing your strategies, and three, without revealing your portfolio. These are things that I think people, especially Wall Street, cares deeply about when they're trading on any venue, regulated or not, you know, and it's because there's money on the line, you know, for them. They don't want people to be able to go onto their Etherscan and see their wallet and, you know, pull up the past 1,000 trades and just figure out what their strategy is. They've poured so much time, money, and energy into developing these things. It's a non-starter for a lot of these people. So from my point of view, Shield Swap is really meant to be the introduction of confidential finance from our point of view, because it is really an opportunity to showcase how to do it right.
That's amazing, man. So walk me through it really quickly. So what can the world see and what can't they see with Shield Swap?
Yeah, so the idea is that, you know, traders really want to know how much liquidity there is on the books. So because of that, it's designed so that you can go see how much there is in the reserves for tokens. You can see how much is available, how much is there. But ultimately, as the trades are executing, you can't see who it is that's executing the trades. You also therefore can't link trades across each other. So people can't see, oh, this person traded here and then traded there. There is no cross linkage across transactions. And because of that, ultimately also the assets then get stored into your Shield wallet. And Shield wallet itself is a private wallet. It's a confidential wallet. So it does not reveal your portfolio holdings after you've done the swap.
Whoa. So we have a question for the audience. Who is this for? When it's day one of this launch, like who do you want walking through the door?
Well, I think that this is ultimately going to be very valuable for those who are professional traders, for those who have a lot of money on the lines, for financial institutions who are holding the balances for portfolios of large customers or large enterprises, because these are the people where the volume really matters, right? Like, let's say you're Jane Street or you're Citadel. One of the problems with them is that they truly do not want people stalking their system. They don't want people to see what's going on because their strategies are sensitive. It's highly valuable things. But additionally, like take a Vanguard, for example. They have these ETFs that have pension funds and retirement funds in them. Imagine when they're rebalancing like 1% of the portfolio, that you have the entire crypto industry's traders just front running them. That would be insane. And so from my point of view, like, these people can't come on chain until there's some concept of confidentiality and some concept of compliance in it. I think that these two ideas are naturally tied to each other, that one cannot exist without the other. And once these things exist, you now have a venue that's mature enough to allow them to start to participate.
Yeah, and as you're saying it, I have so many more questions, because we were talking about this during our 24/7 financial markets talk, and we were talking about this with, some of our more institutional oriented guests that were on earlier today. How is Wall Street participating in crypto now, since this doesn't exist?
Well, they're doing it the old-fashioned way. They're doing it through proxies effectively. Like, you've seen, for example, there's been, the Bitcoin ETFs. There's also been strategy. There's been, SBET, DFDV. There's all sorts of these, companies, these tokenized companies that are effectively acting as a proxy into crypto. And I just don't think that these, they call them digital asset treasuries. I don't think that these are going to be the best format long term. I think it's the format that's being used right now because it's what's possible from a regulation standpoint. But it's also because of the shortcomings of what crypto rails even offer. I do think that as time goes on, that's going to change. And I do think that already you're starting to see different types of Wall Street financial institutions start to dabble in real crypto and in real on-chain finance. They've gotten very interested in yield vaults. They've gotten really interested in different types of market opportunities. And I think that that's going to continue to grow. But they can't move size right now without being traced, without being followed, without being watched and monitored. And so I think that's a huge problem that needs to get solved.
Man, I have so many more questions for you, but I know we're getting close to the end of our time together, and I'm so grateful for it. As we're starting to close this out, what's next for Shield? Where can people find out more? How can they get involved? I'm sure there's a lot of people in the audience like me that are keen to learn more about this.
Well, I'll start by saying Shield Wallet is launched. So you can find us in the iOS App Store. You can find us in the Android Play Store and also in the Chrome Web Store for your browser. If you go to shield.app, you can also learn more about it. With Shield Swap, this is going to be opening up into early access in the coming weeks. And with that, I'm very excited to share, you'll be able to go to shield.fi and you'll be able to apply, and you can basically be an early trader on the platform. But yeah, right now it's in early access. We're looking for folks who are really interested in using the product, giving us some honest feedback, and trying to make sure that this is a venue that is not only professionally done, but it's also one that meets the requirements for people before we turn it on and open it to the public.
Man, I'm so grateful. Literal alpha. I am so grateful that we got that on the show. And I'm sure a lot of people are going to be reaching out. I'm incredibly grateful. And as we're closing this out, Howard, I'm really curious, what's next for you? What's next for the second half of 2026?
I mean, we're just continuing to ramp up more and more. With Aleo now kind of built, we now have this opportunity to start to build out products, especially in the finance side of things. I'm very excited to continue to expand the horizons of what's possible, both on the assets that are supported and also on the types of financial products that are out there. We do have a lot of people that I'm talking to that are excited to see lending markets come online, to see perps come online, to see RWAs become available, things like this. I think we're exploring every opportunity or every avenue that's out there. And trying to figure out what makes sense. Ultimately, I think that Wall Street is getting very excited about on-chain finance and especially confidential on-chain finance. And so, based on the demand, based on where the market goes, we're very excited to be building for that.
I'm really excited too, man. And I'm sure a lot of folks who are tuned in as well are. Thank you so much, Howard. This was an incredible talk, man. I'm so grateful, and I hope that we can do it again soon. This is exciting times.
Will, thanks for having me on, and I'm looking forward to doing it again.
Let's go. My God, what a talk that was. Thank you all for tuning into Blockhouse. And remember, if you want to get in touch with the speakers, make sure you go RSVP on the Luma. It's the only way that we can help you get in touch with them if you're interested. You can find the Luma at Real Motion Inc. on Twitter, at WrappedXYZ on Twitter, or luma.com block_house RSVP if you want to get in touch. Stay tuned. We got more for you. And thank you guys for joining us for the inaugural Blockhouse. Let's get back to the show. Yo, what's going on, bro? Oh, you looking for a job? Okay, hold on 1 second. I'm just in the middle of something. Talent is your biggest competitive advantage, but only if you hire right. Morales HR is a human-centered recruiting and executive search firm built for today's business demands, delivering curated, high-quality talent when it matters most. From full-time contract roles across North America, Morales HR connects you to the talent your company needs. Real people, real experience, real results. So if you're falling behind on hiring, frustrated by low-quality candidates, or worried about the rise of fake resumes, go to moraleshr.com and experience a better way to hire. And if you're the one looking for a job, look no further than moraleshr.com. They're here for you too. No black box and no resume sent into the void. You work directly with real people who take the time to understand where you've been and where you want to go. So if you're looking to make your next hire or you're looking for your next job, go to moraleshr.com and experience a better way to move forward.
A brand's reputation isn't built in the real world, it's built online. In the age of AI, malicious actors are using modern tools to attack faster and at a larger scale than ever before. Impersonation accounts and cloned websites are used to target the users of brands of any size that has reach, and they're getting harder to tell from the real thing. This is why Chain Patrol takes on these threats to monitor, block, and take down online threats that prey on the trust of users, protecting your brand so your customers never have to guess what's real.
Hey everybody, I'm Will from Real Motion, otherwise known as Living with Will, otherwise known as a human being. Thank you guys for tuning in to the inaugural Blockhouse. It means the world to me that you're here. If you're looking to do some marketing, if you're looking to make some great content, or you're looking to do some amazing events, reach out to myself at Real Motion Inc. or Living with Will, and Mark and I are happy to help however we can, whether it's a wrapped event, whether it's a Real Motion affair. You let us know and we'll take good care of you. Thank you so much for being here for Blockhouse, and let's keep it going, y'all. Have a wonderful day, and I love you. Hey, everybody. Thank you to our speakers and our audience for tuning in today. This event was created for educational and entertainment purposes only. Nothing said reflects financial, investment, legal, or tax advice, and no statement should be interpreted as a recommendation to buy, sell, or hold any asset. Views expressed are those from the individual speakers, not the hosts or the organizers. Please consult a licensed professional and do your own research before making any financial decisions. Thank you again for tuning in to Blockhouse. Let's get back to the show. My God, what a talk that was. Thank you all for tuning into Blockhouse. And remember, if you want to get in touch with the speakers, make sure you go RSVP on the Luma. It's the only way that we can help you get in touch with them if you're interested. You can find the Luma at Real Motion Inc. on Twitter, at WrappedXYZ on Twitter, or luma.com block_house RSVP if you want to get in touch. Stay tuned. We got more for you. And thank you guys for joining us for the inaugural Blockhouse. Let's get back to the show. Yo, what's going on, bro? Oh, you looking for a job? Okay, hold on 1 second. I'm just in the middle of something. Talent is your biggest competitive advantage, but only if you hire right. Morales HR is a human-centered recruiting and executive search firm built for today's business demands, delivering curated, high-quality talent when it matters most. From full-time contract roles across North America, Morales HR connects you to the talent your company needs. Real people, real experience, real results. So if you're falling behind on hiring, frustrated by low quality candidates, or worried about the rise of fake resumes, go to moraleshr.com and experience a better way to hire. And if you're the one looking for a job, look no further than moraleshr.com. They're here for you too. No black box and no resume sent into the void. You work directly with real people who take the time to understand where you've been and where you want to go. So if you're looking to make your next hire or you're looking for your next job, go to moraleshr.com and experience a better way to move forward.
A brand's reputation isn't built in the real world, it's built online. In the age of AI, malicious actors are using modern tools to attack faster and at a larger scale than ever before. Impersonation accounts and cloned websites are used to target the users of brands of any size that has reach, and they're getting harder to tell from the real thing. This is why Chain Patrol takes on these threats to monitor, block, and take down online threats that prey on the trust of users, protecting your brand so your customers never have to guess what's real.
Hey everybody, I'm Will from Real Motion, otherwise known as Living with Will, otherwise known as a human being. Thank you guys for tuning in to the inaugural Blockhouse. It means the world to me that you're here. If you're looking to do some marketing, if you're looking to make some great content, or you're looking to do some amazing events, reach out to myself at Real Motion Inc. or Living with Will, and Mark and I are happy to help however we can, whether it's a wrapped event, whether it's a Real Motion affair. You let us know and we'll take good care of you. Thank you so much for being here for Blockhouse, and let's keep it going, y'all. Have a wonderful day, and I love you. All right, everybody, welcome back. We're live yet again. This is the Building the Rails for the Agentic Payments era. I'm here with James Lawton and Mark Vanderberg. It's great to be with you both, gentlemen. Thank you both for being here.
Thanks for having us.
No problem. Great to be here.
I hope I got both those names pronounced correctly. And in the meantime, I'd love for, people that are tuning in for the first time, it might be their first time meeting you both. So, James, I'd love to start with you. If you guys could give a quick intro about yourselves, that'd be great.
Yeah, of course. So really happy and great to be here. So I'm James Lawton. I lead the DevRel function as well as the Agentic Payments initiative at Polygon Labs. Polygon is a blockchain, but really what we're corely focused on is also building out the open money stack. And that's basically a vertically integrated stack that comprises everything from B2B payments, treasury settlements, so on and so forth. But as well, a core piece of this is also the agentic payments, which I think we're all in agreement is going to go exponential in the near future.
I love that. And over to you, Mark.
Hey everyone. I'm Mark Vanderberg. I am the Chief Strategy and Marketing Officer at the Algorand Foundation, and specifically looking after the Agentic Commerce initiative at Algorand. And so most people probably know Algorand. Algorand has been around for a while, 7 years. We're layer one. And we're very much focused on payments and tokenization. Those are the two pillars on which we've based our success. And so we're specifically very much focused and excited about agentic commerce and the opportunity that it represents, and specifically because it's very well aligned with how our technology works. So we feel Algorand is a great fit for agents, and so we're looking forward to talking more about that.
And you make a great transition for the topic of this panel, which is, I think Web3 overall, everyone's very excited. Agentic payments is one of the hottest narratives that we have in the industry right now. So just kicking it to you first, Mark, what does this look like for you all today? And what does the future look like that you are trying to build as it functions at scale?
Yeah, so when you think about agentic commerce, I think, first of all, I think we all have to realize we are in the very, very early innings of agentic commerce. And so when we think about agentic commerce, like there's two kind of broad, if you want, classes of use cases. One is focused around kind of micropayments, the X402 use case. That's the kind of like a use case that Coinbase has been promoting with X402. And then, of course, there's the traditional e-commerce that could become agentic at some point as well. So that's how we look at it. We look at those two two kind of segments. And so we're very much focused on the first segment, on the X402 segment, and really making a lot of progress there. And we can talk a lot more about that as well. The e-commerce segment, I think, will take a bit longer to develop, specifically as it relates to crypto, because of course there's much more competition from traditional payment rails. There's less competition on the micropayment side. And so I think e-commerce will also be a massive opportunity. I think it will take a little bit longer to develop.
And kicking it over to you, James, anything you wanted to add to that point?
Yeah, so I mean, I definitely echo a lot of what Mark's talking about. So like, of course, microtransactions at this like service level, especially where X402 came into play, you don't need an API key to access a lot of these services. And we're seeing a lot more adoption over this. I think a few things that I kind of think of is, how do we put an agent into every person's in the world hands? So I think that's a massive opportunity that like still isn't fully focused and realized today. So that's a big opportunity. And I think one thing I want to touch on the agentic commerce side is I'm really excited about not only can my agent go and buy something from a Shopify store or Amazon or whatever the case is, but also new paradigms that this unlocks where agents can have increased levels of personalization. They can actually know their operator who is associated with that agent and buy things in advance for you without you even realizing it. And that I think is the key moment that really like flips this agentic commerce on its head where I'm not just saying, oh, go purchase something from Amazon for me, but it can do this preemptively because it knows my pattern, it knows my buying behavior. And that's where I feel like the next unlock of agentic commerce is going.
I completely agree. And I want to ask you guys more about this point as well, but you had both mentioned X402, so I think it's worth, touching on this briefly for the audience who this might be a relatively new term and a new concept. So for folks who are tuning in, this is an open standard that was repurposed. It was a mostly unused piece of the HTTP spec, the 402 payment required status code, for those who are keeping track. And it lets agents pay for things automatically with stablecoins, without a credit card, without a subscription, or without a human's approval for every transaction. And this is something that both of you are building. This is something that other folks in the industry are building with as well. So I'm curious, and James, I'll go to you first this time. How are you both approaching this on your businesses, and how does this help strengthen what Algorand and Polygon are bringing to the world?
Yeah, there's a lot of things that we're working with on X402. One thing I want to say is that we're pretty generalized in terms of like protocols. So whether it's MPP or X402 or AP2 from Google and so on, I think the jury's still out of what exactly the standard or protocol will actually be the dominant one. And so we're pretty open-ended in terms of like what actual methodology or protocol is used. We just want to accelerate agentic transactions at the end of the day. How we're approaching it is the same way that we're approaching our core product, the Open Money Stack. So we think of it as a vertically integrated solution. So basically, you get an agent. The agent has verified mandates that it can execute on chain, like 100 USDC over some time interval or some fixed amount. And then you also need to solve kind of both sides of the marketplace. So you need the services. So you need interesting things for agents to actually purchase. And then you need a set amount of buyers to actually purchase those services. And so we're working on accelerating both of those. So the supply and demand side. And I think it's pretty unique because, for instance, on Polygon, we have a gas incentivization program where basically agents transact for free. And on the supply side, we're actively onboarding new and interesting services and putting them first and foremost in front of thousands of agents that are interacting on Polygon in order to accelerate that adoption. So we're focused on both sides of the market and making it as easy as possible to solve a specific use case and bring value to users ultimately.
I love that. I have so many questions about that. And Mark, over to you. How about you all?
Yeah, so I mean, very much like Polygon, we're also, of course, independent of any particular protocol. And we have X402 implementation, we have an MPP implementation, we have a number of those. We basically follow all the protocols. And, it's interesting to talk about that because there's like this big war of protocols going on right now where everybody's trying to kind of shape agentic commerce in their direction by launching a protocol and get the narrative kind of moving in that direction or that direction. And so we're basically following all the protocols and see which ones makes most sense to implement and then make sure that we have a very very good implementation for Algorand. And that's what we did for X402 as well. So X402, our implementation Algorand was implemented by Coinbase and merged by Coinbase a few months ago. And so when we approach X402, we approach it from two different perspectives. One is a technical perspective, and the second one is a go-to-market one. So on the technical side, our implementation is quite unique because it includes one of the unique features of Algorand, which is atomic grouping, the ability to bundle multiple transactions together and ensure that they both get executed at the same time or none get executed. This functionality of atomic grouping, which is native to our protocol, is embedded in our X402 implementation, and which is very unique. We're the only blockchain, I think, that has that capability merged into X402, which means that if you're now a agent, you can actually process complex payment transactions that potentially include swaps inside the payment transaction itself. So, for instance, the merchant could say, like, I want to be based in USDC. The consumer says, well, I only have algos. Well, within the X402 implementation that we have, you can actually do a swap inside the payment transaction to enable the user to pay in whichever currency they have and the merchant to receive payment in whichever currency that they want. And so that's on the technical side. So we've implemented this as part of our X402 spec, which I think is quite interesting. And then from the go-to-market perspective, X402 is a pretty technical kind of protocol. It's because it's basically focused on pay-per-use APIs. It is inherently a protocol that is geared towards developers. And so we have a very big program around working with developers to implement this protocol, help them implement endpoints. We just launched a big developer competition to help developers launch endpoints on Algorand and actually drive traffic to those endpoints. And so that's a really big focus of us. The second thing that we do is that we work very closely with big software companies that have a whole set of APIs that are typically sold on an API key basis. And so we're basically helping them move that to kind of an X402 endpoint strategy, and then working with startups and developers who then can take advantage of these API endpoints and build exciting new consumer-oriented services around that gives a completely different perspective of how you consume data, consume content, consume compute. So that's kind of the second approach that we have. So both we have a pretty unique technical approach, and we also have a very aggressive kind of go-to-market approach.
Very cool. Yeah, there's so many ways to approach this. Like you were saying, James, from the demand and the buy side, and then Mark, like you were talking about from the go-to-market and the technical side. Like there's so many ways that people are starting to use agents, whether they're builders or consumers. So, you both made it so easy for me to transition. My next question is kind of how we're seeing this massive amount of stablecoin transactions month over month. We're seeing hundreds of millions of dollars of transactions, and a growing share of that is being agent-driven. And a year ago, this was almost non-existent. So the growth chart is off the charts. Where do you all both believe that volume is coming from? What are the real world use cases or the industries that you are seeing on your side kind of drive this volume today? And Mark, we'll start with you.
Yeah. So if you think about stablecoin usage, I think stablecoin usage has always been predominantly trading oriented, right? And I think it still is. I think what we are seeing happen is that one is stablecoins are increasingly used, and this is beyond agentic, but these are increasingly used in cross-border payments. And so we see huge uptick of stablecoin usage in cross-border payments, and we have a very extensive program around helping countries, emerging countries that don't have a solid banking system, kind of use stablecoins as a payment mechanism in those countries. We're in Syria, we're in Afghanistan, we're working with the United Nations and stuff like that. And so that is a very fast growing use case for stablecoins. On the agentic side, I think the way stablecoins are used there, I think the most compelling use cases that we've seen so far around X402 is kind of paper compute use cases, like LLMs specifically, like paper token, paper prompt. So those are the use cases where we see the most traction. And I think pay for data, I think, is the next one that we will see coming. But like it's paper compute and specifically LLM payments where we see the most uptick in X402 right now.
And James, if you feel free to take that, and if it's X402 or otherwise, just curious how you would approach that.
Yeah. So
think it's fairly similar from Polygon. So we have some of the biggest, if not the biggest, stablecoin volume across Polygon. Especially we're really dominant in like LATAM and like growing regions. So a lot of the focus is there. As I mentioned, like really our core product is focusing how do we transition from being a chain to a full stack vertically integrated solution for payments. And really our goal is just to accelerate payments across the world, especially like cross border. And so we're fortunate that we get to work with a lot of like fintechs and financial institutions and neobanks. Like Revolut has some of the most volume on Polygon. And what I increasingly see is like right now the dominant kind of market share of stablecoin, let's say agentic payments, are happening across prediction markets is a big one, and of course Polygon has Polymarket. To date, year to date, we have 23 million X402 transactions, and a lot of those are down to inference, data requests around searching and executing on different trades. So a lot of it's trading and payment related. And I would say the last one that I'm really excited about is this transition from consumer oriented use cases where everyone has their own agent that they're kind of delegating. And in aggregate, this is fairly low volume still. I'm really excited about things like automated treasury management, on-chain credit, and these kind of things being delegated to agents, along with like personalization for merchants that I touched on earlier. These B2B use cases, I think, will accelerate agentic payment adoption 1,000x, 10,000x versus like getting more consumers on board. And so we're seeing a lot more adoption of businesses actively wanting to integrate payments. And I think this is also a function of LLM costs are going down with like open source and open weight models. And so now you can actually embed these in products without, breaking your bottom line. And so now we're seeing a lot of people actually developing concrete pilots, implementing these at scale, and they're thinking of how to onboard millions of users now.
Yeah, we're living in such exciting times. I'm curious, speaking on that point, we've seen so much of this adoption being oriented around payments, and we share like the excitement around, the consumer unlocks that are going to come from this. What do you think that the roadblock or the barrier to like more consumer adoption has been? Because obviously we're seeing so much of that traction in payments, but obviously the use cases are there. So what do you think those blockers are?
The blockers, I would say, are not down to, I would say speed in general is not really a concern anymore. I don't see this at the highest level. And like personally for me, when I'm using an agent, I delegate it and then walk away. I spin up another agent and I'm constantly orchestrating a bunch. So speed is not a massive priority for me. Low fees are par for the course, and we have a lot of like things like payment channels can be implemented in order to linearly scale agentic payments at scale. So I think this is one way that you can bring fees down, like even at massive scale that a large enterprise or fintech would require. I think the main things is kind of around, for one, agentic identity is a massive thing, and this is still not like standardized across the board. How does a bank enable one of their users to delegate some kind of threshold to an agent that's operating on their behalf? How does this work for a merchant? And how do you make this standardized so they can actually view these different sites and APIs that are serviced by them and have them execute autonomously? So I would say that's a pretty big bar. And then ultimately just getting and solving the onboarding problem for consumers. I think it's still not easy enough to spin up your own agent, to have all the skills embedded in that so it knows to actually where to purchase or where to find things or where to discover these services. It's all very manual still. So I think once we hit these two inflection points, it's going to be exponential.
Yeah, it's interesting because it's something that I was thinking on the technical side. I thought that speed was going to be a blocker, so I'm glad to hear that it's not necessarily. And then the unlocking consumers is something I'm quite keen. Mark, I'd love to hear. We share a love and affinity for marketing, so I'm curious how you'd approach the same question.
Yeah, I agree with James. I think like technical and pricing, I don't think are real barriers. I think Algorand does over 15,000 transactions per second, and we can scale that easily beyond that. There's proven methods to do this. You could do state channels. You could do a number of things to kind of get this to 100,000 or even 1 million transactions per second. So I don't think speed and throughput is the issue. cost is not the issue either. I mean, a transaction on Algorand costs 80 microdollars. You need to do like 125 transactions to spend a penny. So I think that's pretty good. So you could really do micropayments at scale with this. And I agree with James. I think the biggest issue to me is trust. Nobody trusts agents, and agents are non-deterministic systems. So it's actually very hard to build trust to an agent because you never know what an agent's going to do. Like, it's non-deterministic by design. So that's a big issue. And we could talk a little bit more about that. We have some ideas on how to tackle that problem and solve it. And then the second one is indeed user experience. I think currently, and this is the reason why I think agentic commerce hasn't really taken off yet at scale, is that there's not an easy way for a user to interact with an endpoint. To take the example of X402, like practically in order to do it, the endpoint either has to have a website where you connect a wallet and then you can actually make those transactions, or you need to install an MCP inside Claude or inside whatever LLM you use, which basically cuts off 99% of all consumers who are not going to install an MCP server or don't even know what MCP is. So I think there is definitely a big user experience issue. And so we're all trying to figure out how to make this easier and how to make this work end-to-end in a seamless way. But I don't think we're there yet.
Man, I love that. I have so many more questions for both of you. You mentioned something, Mark, that I think is worth us going into, right? Is this issue of trust. As agents kind of become more and more part of society and part of the way that people transact and part of the way that business operates, mistakes and fraud are going to continue to grow, right? We've seen it already kind of start. We've seen some bad actor, malicious agents in the past few weeks. And I'm curious, how are you all approaching this? Like, how are both of your teams kind of gauging this problem and attacking this problem head on? And Mark, we'll go with you first this time.
So the issue of trust is multifaceted. Like, if you think about like OpenClaw, for instance, like the whole security architecture of OpenClaw is very problematic because you're basically giving OpenClaw all of your keys and all of your private data, and then you're just hoping for the best. And so we know in crypto that is not the way to go. In crypto, what you do is you basically create a wallet, and then you store all your private keys inside your wallet, and then you sign with your wallet if a transaction needs to go through. That is the proper architecture, right? And so that's one element. And so the way I think you solve this problem is you need to have some sort of a standard that forces OpenClaw to reach out to the consumer who has their keys installed in their wallet and have the consumer sign off on the transaction. And this is actually a protocol and a standard that we're about to release in the next couple of weeks that is specifically going to tackle that issue and propose an open standard and an open protocol based on open elements that anybody can adopt and use. So that's one element of trust. The second element of trust is what James also mentioned, is the problem of identity. Like if an agent misbehaves, who's responsible, right? Like, you can't send an agent to jail. So behind the agent, there always needs to be somebody responsible for the actions of the agent. And so if you take it from the perspective of the user, if you have your own shopping agent, how does the merchant know that they can trust that shopping agent? They need to understand who the user is behind that shopping agent. Or if you reverse it, if you're a shopper and your agent is talking to an Amazon agent and finds a great deal on a Dell notebook, how do you know that Amazon agent is actually Amazon and not some sort of a fraud that is pretending to be Amazon, right? So this is the second big issue. And so to solve this, you need an identity system that connects the agent's ID to the user ID and provides a chain of provenance between the two, which is also what the protocol that we are going to propose, hopefully by next week, will actually try and solve. And so that's, I think, how we think about this. It's a really, really big problem, and it's a really big bottleneck for agentic commerce to really take off in a big way. And so I think we have some good handle on this, on how we plan on tackling this, and we can't wait to share this in more detail very soon.
That's amazing, man. I love it. We needed some alpha from Algorand. That's great. And James, same question to you. How are you guys approaching this at Polygon?
Yeah, I'd love to hear the alpha on new protocols. I always I love new stuff being developed, especially on the protocol side and identity. So On the Polygon side and how we're approaching it, so as I mentioned, we have like a vertically integrated stack. So we build our own wallets. And basically, this allows us to also have customizations built specifically for agents. So one thing that we do, a user can just authorize via email address or Google sign-on or whatever OIDC provider, and they can create something that we call a smart session, which is basically like a cryptographically verifiable on-chain mandate that the agent gets. And so I touched on this a bit earlier, but this means this agent can only transact up to 1,000 USDC over a 24-hour period to X, Y, and Z protocols or contracts. So this is, I would say, par for the course where you need some kind of scope mandate in order to authorize this. And through our basically system and our protocol, it allows different issuers such as banks and fintechs and so on and so forth to create these scoped credentials and these verified mandates, and those exist on chain. So I think of kind of cryptography in general, and like the crypto ecosystem is kind of this counter to AI that just has massive amounts of data and can reason undeterministically, as Mark said, but cryptographically verifiable truth kind of gets at the heart of this. And so this is a great blocker in order to make sure that you can prevent your agent from things like prompt injection attacks and several other kind of malicious activities that would restrict it from actually being deployed in like a consumer or a B2B use case. So that's one thing, is like engineering goes on the prevention side. I would say the last thing is that I see, in addition to what Mark mentioned around identity, I would just say like probably refunds and recourses of what happens if an agent does something malicious or if it just purchases the wrong thing. I personally have experienced this. I delegate an agent to go buy something and it buys something completely different. So I think also a recourse of when do you actually deploy something like an escrow or settlement system, and what are those thresholds or what are those mandates, is going to be a key factor in order to make sure that businesses are comfortable deploying agentic systems and having agents transact between each other, or consumers doing this at scale. So those are the main ways we're approaching it.
So exciting. Man, I wish I could spend the next 3 hours just asking you guys questions, but I know you're both incredibly busy. So I got one last one for both of you, but I just want to say a very heartfelt thank you to you both. And to everybody who's been listening to this, make sure you follow both of them, follow both their companies, and stay tuned because they're cooking. In the next 60 seconds, I got a prompt for both of you. James, we'll start with you. What's next on the roadmap? What are you most excited about for 2026, whether at the company or in general, the industry? Yeah, what's on your plate? What's on your mind?
Oh, the industry. I mean, I'm excited for the next phase of agentic exponential growth. So that's the major one, but I think all of us here are excited about that. On the Polygon side specifically, I'm really interested in this aspect of agents having a track record, because I want to give something new and innovative to merchants, to PSPs, to neobanks that is not possible in the traditional like consumer purchasing a product kind of flow. And I like the idea of, and it combines several of the discussions we've had here of like identity, of having like verifiable mandates on chain, having it easy for consumers to spin this up. But the idea of your agent is personalized to you, and it knows your history, and it knows, and it can preemptively buy things from you from various merchants, and then can also disclose that information as you see fit to these different service providers or merchants. So that I feel is a massively game-changing way of how you think about commerce and how humans exist and purchase things today, that I'm looking forward to accelerating and that we're actively working on to make sure that we can accelerate this next phase of growth.
I love that, man. Now we share that excitement. Yeah, can't wait. And Mark, same question to you.
Yeah, it's something I mentioned earlier in the call. We recently, just last week or 2 weeks ago, we launched a global X402 competition, and I'm extremely excited about that. We have over 1,000 developers already signed up that are building endpoints on Algorand. And so this competition is going to run for 3 months, and it will culminate in a final session live at DEF CON in Mumbai, where we're going to give away $100,000 to the people that are able to generate the best endpoints that generate the most traffic. And so I'm super excited. There's a lot of enthusiasm in our ecosystem about this. A lot of developers are building these endpoints, are throwing things against the wall, seeing what sticks, seeing what works, what doesn't work. We're in this kind of early phase of excitement, and I think we need a lot of people trying a lot of different things to see what really drives the market forward. And so I can't wait to see what developers are building on Algorand. And so I hope to see many of them at DEF CON in Mumbai. And so it's not too late, by the way. Any developers listening, it's not too late. You can still sign up and you can build your endpoint, and we'll help you do that.
Man, thank you both so much. We are incredibly lucky to have heard you both speak on this. I wish you both all the success in the world, and thank you both for coming to Blockhouse today. Really appreciate your time.
Thanks, Will. It's great to be here.
As well. Great to be here.